I'm just preparing the live stream.
Okay, thank you.
While Ms. Antler's doing that, Ms. Howes, Mr. Ward and I have put the order for the witnesses to be Mr. Richardson first and then Ms. Miller.
Thank you. And are both of them intending to be present while the other is testifying? In case there is a question I have that I want both of them to answer.
I'm available.
Yeah, Ms. Miller was intending to attend. I can't speak for Mr. Richardson, so hopefully Ms.
Yeah,
Ward.
I'm available. Yeah.
Thank you. Okay, so if we're ready to start with Mr. Richardson, then our practice, Mr. Richardson, is to swear or affirm the witnesses. Because we're all distant, we're using the affirmation. Do you have any objection to being affirmed? You're on mute.
You're muted, James.
Well, I object to being on mute, but I have no objection to be affirmed.
Thank you. Thank you. Okay, so James Richardson, Richardson.
Correct.
You solemnly affirm that the evidence you will give in this hearing will be the truth, the whole truth, and nothing but the truth.
I do.
Thank you.
Thank you, Ms. House. So, Mr. Richardson, did you prepare an opinion in this arbitration with respect to administrative overhead and life cycle plans?
Yes, I did.
All right. Ms. Antler, could you bring that up for us?
I'm sorry, which report?
The MNP report.
Okay.
All right, Mr. Richardson, and can you see that on your screen?
I see a statutory declaration on my screen.
All right, and if we start, Mr. Richardson, by just turning to Ms. Antler, page 11 of that report. Sorry, Ms. Antler, can you turn to page 11 of that report?
I'm on 11. Are you not seeing the CD?
No.
No, it's
No,
not coming up.
it's still on page 1 on our screen.
Okay, one moment.
Perfect, thank you. Mr. Richardson, is this your curriculum vitae that we see on the screen here?
It is.
All right, before we turn to the report itself, can you just take us through briefly your educational background and qualifications?
Certainly. So I have a master's of business administration. I'm also a certified management consultant, and I've got about 22, 23 years working in public sector. So the last 6 or 7 years I've been in consulting, both here at MNP and then previously at Deloitte. And then previous to my consulting chapter of my career, I worked with the Government of Canada. And I think what's worth highlighting relevant to this particular proceeding is throughout I have had extensive exposure, work, and experience with municipalities. So if I rewind to pre-consulting, I did a lot of work with funding programs, working municipalities, looking at some of the capital programs, looking at how they were going to sustain a new builds, and so the total cost of ownership. So there's kind of that work there. And then into my consulting period of time, I've worked with large municipalities, small municipalities, and ranging on projects and engagements from program design, any program evaluation, operational review, where we're looking for efficiencies and effectiveness, sometimes even relevance of programs. And then more specific dialed in projects like financial modeling, long-term financial planning, corporate policy review, that kind of stuff. So all that to say, spent quite a bit of time with municipalities. It's not the only place that I work, but it is an extensive area in which I do practice and continue to practice. Internally with MMP, in addition to being a partner in the Edmonton practice, I'm also the Alberta public sector leader. So that means I work with my colleagues across service lines. So not just an advisor, but also with the accountancy when we're looking at working with the public sector here in Alberta, inclusive of municipalities. So I cross over a little bit working with them as they're doing the audit and assurance services. I don't provide it, I just work with them, and we build some of those relationships out as that plays out. Additionally, nationally, I have a role as a municipal community of practice lead. So that's kind of doing what I do and the leadership role in Alberta, but across the country, specifically focused on municipalities and looking at, what are the needs, what are the trends, how do we bring these clients what they need, and how do we make sure that we're prepared to offer services to meet some of the problems and challenges that they have, and then bring those resources to those municipalities when and if required. So that's me in a nutshell, covering off a few different areas. Does that meet your needs, Sean?
Yes, thank you. I was going to ask you some specific questions, but I think you've gone through most of your background. So our practice, Mr. Richardson, has been to start with dealing with your qualifications. So I'm going to ask my friend, Ms. Roberts, the counsel for the county, whether she has any questions at this point specifically about your credentials and qualifications before we move on to your report.
Thank you, Mr. Ward. Mr. Richardson, I do have a couple of questions for you. The bulk of your report is taken up with your resume, so I'm glad that you went over some of the experience. I think it's obvious that you have a lot of experience. It looks to be largely strategic and consulting oriented.
Quite a bit. Oh,
sorry, Mr. Richardson, I'm just trying to ask if you would agree that it's largely strategic and or consulting oriented. Is that fair?
My particular experience is, and that's why we have a team involved in delivering the report.
Right. And so there's also Mr. Wasser. I just have to get my report, sorry. Your report, but I have to go grab, I've forgotten the other fellow's name.
Gordchuk.
Correct. Okay,
Mr.
great.
Brock.
And Mr. Wasser is a chartered accountant, correct?
CPA, yeah.
Okay. Yeah, I know we've all got to use the new acronym,
I know.
right?
They get really sensitive if we don't say CPA.
Yeah. Okay, so we'll stick with CPA. So, and then Mr. Chalk, his background is what?
He's also in management consulting, but specifically in around asset management, utilities, asset management programs, those pieces. So his CV kind of speaks to that as far as his consulting and also pre-consulting experience. So he brought that expertise specifically around the life cycle plans.
Right. And you yourself do not have any accounting. You are not a CPA, correct?
I am not a CPA.
And you don't have an accounting practice background, correct?
No, I don't have an accounting practice background, which is why I relied on Benji in the preparation of this report. And then, but I do have some experience with the asset management. I work with Gordon and his team quite a bit, especially as it intersects with municipalities.
Okay, great. I don't have any other questions, Ms. Howes. I do have a question for Mr. Ward, which was, I'm not sure whether I was just somewhere else mentally, but I don't remember hearing what we're qualifying Mr. Richardson as. And so maybe if we can just revisit that, and I apologize if you did mention it and I was just thinking of something else and missed it.
No, I think our proposal would be to have him qualified as an expert in relation to municipal government finance issues, and specifically with respect to the issues of administrative overhead and life cycle plans.
I'm going to have you say that again slower.
Sorry. We'd seek to qualify him to provide opinion evidence in relation to municipal government finance, and specifically with respect to issues relating to administrative overhead and life cycle plans.
So, Ms. Howes, in light of that, I don't have any concerns about the fact that Mr. Richardson is qualified to speak about life cycle plans. I think I can see that from his experience. I have some concern about municipal government finance to the extent that what is the basis. Part of the issue is that I think there are a number of assumptions within the report about that are stated explicitly, which is helpful. But I think there's clear assumptions made, and there's the administrative overhead is an accounting function within the municipality and issue the town. And I have some concern about whether or not we can just be a little bit more specific. And I'm going to ask this of Mr. Ward, if we could be more specific in qualifying Mr. Richardson with respect to municipal government finance. And I don't mean any disrespect to you, Mr. Richardson, I'm just trying to be specific. With respect to the specific skill set that Mr. Richardson is speaking from, Mr. Ward. And so I think the focus of the report in terms of, you've got two pieces as I see it: administrative overhead calculation and life cycle plans, I think is the next big heading. It is. And I think that Mr. Richardson's expertise, and I appreciate there's a team, but Mr. Richardson's one person who's speaking for himself. And so I think the expertise comes from a consulting basis, not a finance basis. And so I'm struggling with that piece in terms of the accounting aspect of it.
Well, and I think we sought to avoid using the word municipal government accounting and talk about municipal government finances. I'm okay with changing the wording to try and address that if there is a better term for it. I think Mr. Richardson and his partners in the report have been pretty careful to qualify the basis of their understanding and assumptions and included each of their CVs. So I'm not seeking to purport to provide an expertise beyond what is set out there. Sometimes it's always difficult to boil that down into the one sentence that we're giving, Ms. Howes. I recognize that it's not intended to provide an expertise specifically in municipal government accounting per se for Mr. Richardson. The reference to municipal government finances was supposed to reflect his consulting expertise working with municipalities around these issues and developing financial strategies and plans. I think that's consistent with that language, but if there is a different wording you think is more appropriate, I'm certainly happy to try and frame it in that way.
I'm prepared to offer a suggestion, Ms. House, for consideration. That's helpful. So I'm thinking on my feet here, Mr. Ward, so I'm doing my best. You feel free to edit my suggestion. I was wondering about whether we could talk about municipal government finance strategy and or administration, because I think that's really, if I understand Mr. Richardson's expertise, that's really where his lens is, as opposed to the accounting lens of it. And so if you want to think about that and modify it or not, that's what I'm throwing on the table. And I'm sorry, I didn't have time to think about this before because we didn't have this conversation earlier, but I just like to make sure that we're not making a suggestion that there's an accounting lens. And I wonder if there's just to add on.
Yeah, that's fine. I mean, I'm looking at the screen right now where he uses the word strategy and operations in his description. So I think that's a reasonable request. If we talk about municipal finance strategy and operations, I'm fine with that, Ms. House.
And I am as well, Ms. House, and I'm happy for the expert to be qualified in that regard.
Okay, so let me see if I've got this correct, that you now have no objection between the two of you to qualifying Mr. Richardson as an expert in relation to municipal government finance strategy and operations and life cycle plans. Have I got that correct?
Yes. Ms. House. Thank you.
Okay,
Same here.
he is so qualified.
Okay. Mr., may I proceed, Ms. House, or do you know more?
Sorry, Ms. Roberts, I think with our experts, we've generally asked them to do an overview before I turn it over to cross-examination now, if that's still the process we want to follow.
Over to you,
Yes,
Mr. Ward.
Mr. Ward, can you give me one moment just to take a note here, please? Okay.
Yes, absolutely.
Ms. Antler, just off the record, may I ask that we also pull up the financial town witness statement of Judy Barney from June 30?
Certainly.
Thank you.
Whenever you're ready, Mr. Ward.
Thanks, Ms. House. So, Mr. Richardson, can we start by turning to page 7 of this report? And can you just describe generally what you were asked to address as part of this report and the role that each of you played in addressing those things?
Certainly. So we were requested to provide some review and feedback on some of the evidence sections, so which is shown in Appendix 2. So that's related to administrative overhead and the life cycle plans. So what we did is put together a team of the expertise and the experts that could provide both the experience, the context, and the expertise to do so and provide a good, solid review and feedback based on the information that's presented to us. So more specifically on the administrative overhead calculation, it was myself and Benji, or Mr. Wasser, that conducted that. Mr. Wasser from the assurance perspective and really going into the financial statements and looking for consistency on the calculations, and myself more so on the strategy and planning and principles around cost sharing, drawing from my experience also, which I didn't get a chance to mention at the top there, with working with municipalities on intermunicipal collaboration frameworks. So done a few of those projects and drawing from that experience as to how you build out intermunicipal agreements. Secondly, we also drew upon some of the expertise internally. This is more just, to round out some of the information. So on 1B there on the page, you notice that we talked to a couple other colleagues. This is consistent with how we would work with any client on any type of topic, drawing out the expertise to bring that to our client. But certainly Benji and myself being the ones who are signing off on it, we believe that this is a good assessment and good feedback based on the information provided. With regard to the life cycle plans, I worked with my colleague, Mr. Chalk, who brings that great depth of expertise in around asset management writ large, maturity models around that, his experience working with large and small organizations and inclusive of municipalities and indigenous groups who are municipal-like type of operations. And then my perspective bringing in, again, some kind of that strategy and operations and the experience I have working with municipalities when they're working to implement and or operate some of those programs. So the information provided by the town through council was the kind of the policy background that they were using on the administrative overhead calculation, as well as some financial information. I'm just skimming over to Appendix 2. It's been a while since I looked at it to see the evidence that we used or the information we used from them. Yeah, so some of the budget and then the artifacts related to the life cycle management. So I would say that the summary of our high-level assessment, and we go into a little bit further detail in the rest of the report, is that the administrative overhead calculation, can be viewed as defendable because they have a source of an approach that has been proven out in a certain arena. And then when we did a test on some of the financials that we had in front of us to see, is it applied consistently? For the most part, it's applied consistently. A couple of minor differences, but then, heard some of the explanations from the town as to why that was. But that being said, it is not the only way, and we're not purporting it to be the one best way. And in fact, the best advice that we can give is spelled out a little bit further around the principles that should be considered, adhered to, and what we have seen works well on intermunicipal agreements in other jurisdictions, both in Alberta and other parts of the country. The life cycle plans, I alluded to it a little bit. There are both from the FCM, Federation of Community Municipalities. They have a maturity model and a lot of information in around asset management for municipalities. So we drew upon that, as well as some of the maturity model that we use with smaller municipalities, and looking at that as a backdrop to, based on the artifacts presented to us, saying where would that position them in and around a maturity model. So the maturity ranging from a strict introduction, they're starting to identify that's something they should do, through to a full level of sophistication with systems, processes, and controls that you might likely see in a large municipality. So the assessment against that is where we came to the feedback and the contents of the report that are in there around the life cycle. Mr. Ward, I'm going to stop there just on a summary basis.
Yeah, and Mr. Richardson, if you, first, Ms. Antler, can you turn to the next page 8? I appreciate you've sort of highlighted some of the summary findings, but if we break it down into the 2 categories, starting on page 8 with respect to administrative overhead, without having to review all of the document, can you just give us sort of an overview of your key findings with respect to administrative overhead?
Yeah. So with administrative overhead, first we reviewed the full cost accounting guide that was forwarded, and it was identified as the basis of their approach. So the first bullet, they're saying it appears appropriate. And what we mean by appears appropriate is it appears appropriate in that it's a form of calculation that looks at where do you draw out the costs and how do you apply them, and then how can it be used. So that is the assessment of appropriate. And noting that the policy document that they're referring to applies, talks about one of 2 methods, and then the cash needs approach or the utility approach. The utility approach being the one that was recommended. So, okay, that's the one that they used. And that's assumed that it's clearly communicated with other cost sharing parties. So the second test that I alluded to was looking to see, does it seem like it is applied consistently with the information we have? And that test came back with, yes, it appears it's applied consistently. That being said, we did not want to restrict our feedback to only on that, especially since the method there was alluding specifically to utilities. So we drew upon our experience to identify other approaches that we have seen amongst municipalities for cost sharing arrangements. So you have a simple approach. Often you see a population-based approach, and the calculations laid out there, but essentially it's dealing with what's your percentage of the population, take that percentage, apply against the total cost, that's the cost sharing arrangement. There are more complex and time-consuming approach. We're even getting down into activity-based costing, which is quite labor-intensive, but can get at, think about it from punching a time card on or time coding every single activity you do to figure out what it would be associated with, specifically the facility or generally operations, or not associated with recreation at all, which would then give you very detailed information to find out exactly where the costs are relative to the activities associated with the specific service in question for cost sharing. The point that we're saying it's not necessarily one best way to undertake the overhead calculation is that it kind of depends on what are the greatest concerns or the most important things to attend to. The balancing act is how much detail do you need versus how much you want to invest in continuing to manage what's required in order to execute that cost sharing arrangement. So obviously, if you refer back to the first 2 points, population-based, monitor population, that's relatively straightforward to do and apply. The more complex and consuming approach does require more effort on both the main operator, but also on the audit and verification side to see if it is consistently executed and applied and accountable. So we felt that the best advice we could give is looking at wherever you want to land, what are the key considerations, and looking at it from a principles basis. And you can see them in bold there on accountability, stable, efficient, and focused. And this is drawn from kind of a synthesis of many different activities we've done with a number of different municipalities. And that's in Western Canada, even specifically some of the work that I've done with municipalities on intermunicipal collaboration frameworks, getting down to the kind of the vision and principles. What are we trying to achieve? And then what are the principles against which we should make sure that we're attending to as we come up with a formula or an arrangement. So Sean, I don't know, or Mr. Ward, I don't know if you want me to go into detail on those pieces, but it's in the report.
Yes, no, thank you, Mr. Richardson. And if we, Ms. Antler, turn to the next page 9, can you similarly give an overview of your findings and thoughts with respect to life cycle plans?
Absolutely. So with our experience working with small and medium and even some of the larger municipalities, we have seen a wide range of what I would refer to as a maturity level or level of sophistication with asset management, lifecycle management plans. So in order to do an assessment based on the information provided, we did look at the maturity models that both we've synthesized down that makes more sense for a smaller municipality, but also relative to what the guidance and policy guidance is from the Federation of Canadian Municipalities around asset management. So based on our initial review, and then if you consider some of the points that are down below, it would appear that the town has a life cycle management program that's more advanced than many of the peers that we've worked with. So therefore, that means we have some of their peers that are not as far as long. And then we know there's a couple that would be further along, but they would be in the more advanced state. And that's based on the documents provided. In order to have those documents, the systems, processes, and controls that have to be in place to create those documents to then present to us as artifacts for review are consistent with a higher degree of maturity than just in introductory or beginning the whole journey on that. There's a number of more detailed points that follow both on this page and the following page. But we've made a couple of assumptions as well because we didn't have the information to look at, but it would flow that based on what we've seen, they would also have a consolidated capital budget, also known as a long-range financial plan, or the capital side at least of that. And then it's an aggregate of many of the things that we had reviewed. Other pieces around, some recommendations on what could be done based on the information that we've seen also show up there, but generally the assessment information we have against maturity models tends to indicate it's a relatively advanced compared to their peers, certainly not beginning or nascent, but it also doesn't appear based on the information provided that they would be the echelon of full sophistication either.
All right, thank you, Mr. Richardson. I'm going to turn it over to Ms. Roberts to answer any questions that she may have on your report from there.
So, Mr. Ward, are you asking that we mark the report?
Oh, I apologize. Yes, thank you, Ms. House. Could we have this marked as the next exhibit, please?
Any objection, Ms. Roberts?
Thanks.
Okay, I think we're at, our last one was 38, so this will be exhibit 39.
Thank you.
Ms. Roberts, whenever you're ready.
Great, thanks. Hello again, Mr. Richardson. If I can have you go to your it's page 7, I believe, of the PDF. It's, I actually don't know how to find the page number on, oh, it's page 1 of your report, on the bottom. I've written all over the numbers. Sorry, Mr. Richardson, it took me a moment. If I can just have you look under summary, you reference there Appendix 2, and I just want to confirm Appendix 2, I believe, is the document that starts at page 40. It's page 40, 41. We could just take a quick look there. I just want to confirm that we're talking about the same thing. So the first part on page 40, that's the administrative overhead calculation summarized. Is that fair?
Yep.
Okay. And then the second one is the second thing that you were just talking about with Mr. Ward, which is the life cycle 20-year plan for the various items, correct?
Correct. And I believe we had a couple other documents that fed into that, but I don't see them attached here.
I think, Ms. Roberts, it's page 36 of this PDF where Appendix 2 starts, if that's what you were looking for.
Oh, okay. We can go back there. I was really looking at these two documents.
Okay.
Yeah. But we can go back to 36. So, and 36 is this a document that you prepared? I mean, your team?
No, the appendix is strictly a recreation of what was provided to us.
Okay. So these were prepared by the town, all of this documents from 36 through 41, correct?
I can't speak to who prepared it. I can only say that I got it from council and that's what we reviewed.
Okay. So you don't know who prepared it?
I would not be able to tell you one way or the other.
Okay, if we can go to page 40, please. Did your team review any of the actual data that was used to come up with the numbers and this spreadsheet of administrative overhead?
Do you mean as like an assurance where you go back into the source information that fed into this?
Correct.
That is not what we reviewed. We reviewed this document.
You just reviewed the document and the pages that preceded based on the overview, correct?
Correct. We're providing no assurance opinion, and we can't speak to whether or not it's accurate. It's assumed that these are accurate and fully representative.
Are you aware that the number, if we look at the bottom right hand, if we look at the right hand column, it says cost share administrative overhead percentage, and then you see 2021, and at the bottom there's a 33.18%. You see that?
Mm-hmm.
Were you advised what that represented?
I would have to go back to my colleague Benji specifically on that one. I know he did spend some time on that. I recall we had some conversations, but I don't know specifically on that. I think he did follow up with the representative from the town to make sure he understood that component in order to provide his opinion.
So if I were to tell you today that Ms. Barney, who's the corporate services director, referenced that as being the proportion of the administrative overhead that the town is proposing that the county, the Woodlands County pay, does that jog your memory, or do you not know that at all?
I can't speak to that. I'm sorry.
Okay.
I think I would also point out we were not opining or reviewing or providing any feedback on is the number correct. We're talking about the method applied.
I understood that from your previous answer, but I appreciate you clarifying it.
Yeah, thanks, Mr. Roberts.
Okay. When you're talking about, I think I heard from your experience and also some of your answers to, or your summary to Mr. Ward, you clearly have a range of experience with different, what I think you call in the summary section, municipal peers. That's other municipalities, various municipalities of large, small, middle-sized, is that right?
Correct.
Right. So when you're talking about the town's peers, are you looking at urban more or less the same size? Is that, how are you classifying someone as a peer?
Yeah, when we refer to peers, it's a combination of, well, the fact that it's a smaller urban, so in this case, a town, and then it would be factors around, relative to a population size and overall operating budget. So, and this is drawn upon our experience. In order to be very, very clear, we'd have to do a lot more specific analysis than what was done in order to provide this. But it is consistent with our experience, yes. And that's how we would assess peer, if you will.
Okay. I take it, MNP also then didn't opine on what would happen to the town's financial circumstances if the county was not paying the portion that the town would like to see the county pay. I take it that wasn't part of your retainer.
That was not the instructions that we had, nor what we undertook.
Okay. Have you had an opportunity to review the two reports that were put forward by Colette Miller for the county?
Yeah, I've seen them.
If I can have us look at the following, sorry, page 8 of the statement. So it's 2 in your document, Mr. Richardson. You review there, you have sort of under administrative overhead, I see you have a general statement, but the first bullet before there, you say that your team reviewed the full cost accounting guide that the town forwarded. And I'm going to ask Ms. Antler to pull up that document as it's been produced in the town's evidence in the proceeding, just to make sure we're talking about the same thing. So Ms. Antler, it's at appendix 2, I believe. It might be 4 though, because my memory seems to be bad about appendices. In Ms. Barney's statement, it's appendix 2, page 72 of the, I believe it's page 72. Sorry, it's page 69 of the, sorry, the first page is 69 of the Barney statement from June 30. Mr. Richardson, so we can kind of scroll through this if you would like. Is this a document that you reviewed?
It appears to be, yeah.
Okay. Do you want us to scroll through it any further? Maybe we could just go through a few pages, Ms. Antler. I just want to be fair to you as a witness to give you a chance to look at what's there. Maybe the next.
Yeah, based on the table of contents, that is the document I remember we looked at, yes.
Okay, so if we go back to the table of contents, actually, excuse me. Thanks. So you understood this is Alberta Environment's guide to full cost accounting as a program, correct?
Correct.
And you recall then, did you review the whole thing?
Yeah, it was fully reviewed, yeah.
Okay, and so you understand this was for a water system where it's a user pay system, correct?
Correct.
Okay, and are you aware that the town is not calculating administrative overhead as a use on a, there's no follow through there in terms of it being a user pay system, correct?
We didn't look at whether or not it was a user pay system. We looked at it as a described approach that was fulsome and detailed to be applied in another situation.
And the context in which you were reviewing that was, it was whether or not it was a reasonable way or appropriate. I forgot the actual descriptor you used. It was one approach to determine cost sharing by looking at administrative overhead. Is that right?
It was one approach to calculate full cost accounting, yes.
Okay. And when you say in the sub bullets, if we go back to your statement on page 8, when you say in the sub bullets under that first one, where you refer to the guide, you say the utility approach is the recommended approach. I take it you mean that's what Alberta Environment recommended, or are you?
Correct.
Yes,
No,
okay.
no, that's restating what is stated in that guide.
And you factored in, I think when you were describing summarily your expert opinion, in the second half of that same page 8, where it says there isn't necessarily one best way, and then you go on and you talk about in your, and I know that's supposed to be the team's consideration, best practices include, and you list a number of principles.
Correct.
Yeah, and so you've got accountability, stable, efficient, focused, and you're aware that Ms. Miller added some additional terms, correct?
I'm aware.
So she added affordable. Do you agree with the fact that that is a consideration as well?
I would not put that forward as a principle or practice. I think it is embedded in around accountability, stable, and efficient, and focused. Because the other definition of affordable, I think it's a bit tricky to be able to point to as a core principle.
So in terms of accountability, you'd agree, based on your answer, I think. What you're saying is it should be something that's factored into accountability, stable, efficient, and focused. That's whatever costs and a municipalities incurring, that they be able to pay for those costs and sustain that spend.
Well, I would say that affordability enters into a couple of different territories. One, it's if it's considering starting from how much money do I have to spend versus what is the cost that must be shared. I think that's problematic. Secondarily, affordability is a bit of a qualitative statement. So can I afford versus should I afford? I don't know where that falls in the spectrum. But when, in our experience and in my experience working with municipalities, if revenues are not high enough to sustain expenditures, then you have to look at your expenditures, and that's usually at a service level. So what are we going to do less of? What are we going to stop doing to remove that from a cost? It does not change that the costs incurred to date must be paid. So that's where I'm coming from with the struggle with affordability as a principle.
You're saying that the municipality has to do what it needs to do to be able to address the expense. The expense is the expense.
The expenses have to be paid. I mean, if you've already incurred, they have to be paid. Like I don't have a choice with my bills to say, I don't want to pay that much. I'm only going to pay a certain portion of it. They'll say that, thank you. Now you owe the rest. So if I don't want to do that in the future, I might cut out some of the things that I have in my life, whether it's I don't know, a cell phone or a TV or a program or, the level of internet, the bills that are incurring the costs. I can do that for the future. I can't do that for the past.
Right. So you understand that you're giving evidence in the context of an intermunicipal collaboration framework arbitration, correct?
Mm-hmm.
And you say, and I know we're not recording
Oh, sorry.
this, but it's a bad lawyer habit to say you mean yes, right?
I mean, yes.
Okay, thanks. And so in that context, the go forward costs are the costs that will be incurred go forward once people enter into that kind of agreement. You understand that as well, right?
I understand that.
Yeah, and you may or may not know that in this arbitration, there also is a look backward, what already was incurred and what's being spent. I'm not asking you questions about that right now, just so that we can be on the same page about that. I'm really looking at if we're entering into a go forward agreement, of course, that go forward agreement also reflects back on this particular set of parties agreement that they're going to pay whatever those numbers are for the period that's already passed. I'm asking you, if you're advising strategically a municipality, you're going to do exactly what you just said. If I can't afford cable, no more cable TV.
I would eliminate the service. Yes. So in my experience with the intermunicipal collaboration frameworks, and just from municipal operations and governance, councils can certainly make the decision on what are the services and what are the priorities they want to tend to, and then what will those service levels look like to the constituents or residents in the area. When we have a service such as, let's pick on a recreational facility that is used by residents in multiple municipalities who are deriving the benefit, best practice would be those two councils work together to decide what will that service level look like, and is it going to be stable and efficient? Like we should have something that we can actually continue operating, and then make sure that what the cost sharing looks like is focused in on that, and we've got full accountability for who's paying what, why, when, and how.
Great. And you said when you've worked with other municipalities doing ICF negotiations or frameworks, I'm not sure whether you said agreements or frameworks, but whatever word you used, who is that you have worked with? Is it in Alberta?
It's in Alberta. Yeah, I wouldn't just disclose client names, but yes, it's in Alberta.
Okay. Other municipalities that are similar to the town of Whitecourt?
Correct. And it's actually been with urban, rural.
So your prior experience you're saying has been in a situation comparable to this in the sense that there's one urban, one rural municipality.
Correct. In other cases where there's multiple, but intermunicipal collaboration frameworks, which was mandated through the MGA, typically involves a large majority of the urbans and rurals. So take the urban municipality in which there were urbans, so towns and villages, so incorporated municipalities, figuring that out, and then yes, it would also touch, say, a county or a municipal district to municipal district where they shared a border. It's all about sharing borders. So every urban inside of a municipal district shares a border with that municipal district.
Ms. Miller also proposed the use of the word equitable in your list of principles on page 8 of your, well, 8 of the PDF 2 of your report there. Do you agree or disagree with that?
Could you define equitable?
Well, we're going to go to Ms. Miller's report because I'm not the expert. Sorry, I'm just trying to find the first place where she mentions that for us. Oops. So it's on the second, oh, sorry, Ms. Antler, can we just pull up the September 2nd, September 3rd, I think, report from Ms. Miller. It's on page 2, I believe. So at the top there, Ms. Miller says, we also add affordable, equitable, and value add. So I don't think she has defined it in that particular section. I take it you don't have an understanding of what Ms. Miller meant by that.
I have difficulty speaking to it without a definition. Yeah.
Okay. I think that you actually addressed it in one of your previous answers, but my understanding of equitable is also that it is analogous. So I think you already mentioned when you're talking about intermunicipal collaboration frameworks that the parties collaboratively decide what it is they're going to provide in terms of service and then sharing the cost, because the cost is the cost, I think you noted.
Sorry, could you repeat that?
Yeah, sorry. I don't think that's my mouse screen, but there's a pop-up and I wasn't sure it was mine on the screen right now. So what I'm saying is you said a moment ago when we were talking about your analogy to if I can't afford cable, I've got to not watch cable TV. And you said in a municipal ICF framework, an example, you were talking about ideally the 2 or more municipalities would discuss with each other what the service levels are, what the services are, what the cost is. And that would be a collaborative discussion, correct?
That would be a collaborative discussion, yes.
Okay. And so there it takes into account, I guess, first of all, whether it's an intermunicipally delivered service, correct?
I think in the intermunicipal collaboration framework processes, yes, they would determine that. But the determination sometimes is self-evident in the fact that it is being used by multiple residents from multiple municipalities.
Right, and then they would determine which services, if one municipality said, well, you want this level of service and we can't afford that level of service, they would have to have a discussion about how that was going to shake out and what service level was going to be provided and what the cost associated with that would be, correct?
I think it's a general overview of the process, yes. I think I would add that what we have seen in those discussions and facilitate some of those discussions is there's the financial aspect, but then there's also the service delivery aspect, and then from the citizen satisfaction perspective. So all of those have to be taken into account. What will be the impacts at the citizen use or consumption of the service relative to the dollars expended or not expended, because both come with consequences.
You commented, you summarized or paraphrased your statement on page 8 of your report. The statement that starts, there isn't necessarily one best way. When you went through this in a summary basis with Mr. Ward, you said two things. Number one was greatest concerns, and two was most important things to attend to. And I just wanted you to explain that part again to me.
Okay, one more time. You said two things, and I was thinking
No.
two things, and I lost it. So
That's okay. You said two things, and I wrote them down. So I'm asking you about them. One was, you said, I don't want to paraphrase what you're saying, so I'm going to recite exactly the words that you said that I wrote down. One of them, when you were talking about, your statement here says, there isn't necessarily one best way to undertake administrative overhead calculation, and the approach employed must balance effort required to conduct with the likelihood and materiality of variance in the calculated result, which sounds like somebody that does your kind of work talking, and I just want to really understand it because I kind of don't. And what I heard you say when you summarized what that meant was there's two things. Number one, what we really focus on in best way is not necessarily being one best way, but what the things we think about are, you said, the greatest concerns, and I think that was relative greatest concerns to the, I think, whatever the municipality is that's doing it, or the two municipalities. I'm not certain what you were saying there. And the second one was most important things to attend to. And I wanted you to rewind and let me know what you were trying to get at there.
thank you. I made notes so I don't forget this time.
Okay.
So Ms. Roberts, when I mentioned the term greatest concerns, I agree that's not very specific. So what I'm alluding to there is in any building of a collaborative arrangement or a cost sharing agreement, cost sharing or greatest concerns can vary. So greatest concerns could be strictly, can we get to an agreement to make sure we have sustainability? So what are the costs? How do we fund it? Move on. And so expediency could be the greatest concern. In other cases, the greatest concern could be, how am I going to word this? Making sure all parties are absolutely confident with every single calculation that is employed in determining the cost sharing, which requires a higher level of detail, rigor, and assurance in order to get there. So if that's the greatest concern, you kind of go down the more detailed route. If the greatest concern is expediency, you kind of go down a less labor-intensive route.
Okay, so if I understand you correctly, what's going to be the driver in part in determining the way will be what the greatest concern is for a given municipality. And if we're talking about intermunicipal, it may well be that the two municipalities may have differing ideas of what their greatest concern is. Would you agree with that?
I've seen differing concerns, and I've seen those concerns resolved as well, even if one is starting from a different place. When you look at, okay, what will this look like if we play it all out? So we may have a starting point, but let's examine if we take route A and take a couple of strategies. If we deploy that, if we go ahead and execute against that as far as the statement of what the cost sharing looks like, and then the execution of the administration required to do that, will it be worth it? And then I think when we get into the will it be worth it, that's when we get into the understanding of, okay, what does everybody want? How are we going to go ahead? And what can we all agree on? So I would say there's more process involved. The greatest concern is talking about a point of initiation, not the conclusive decision of which way is best.
Okay, and I understand what you're talking about as actually being about the intermunicipal collaboration framework, decision-making process.
On the cost sharing.
Right, the cost sharing component. But what you use that term to refer to and where the takeoff point was in your summary of your opinion was administrative overhead. And this is probably where I'm just getting a little bit confused. I think your statement in the opinion is there isn't necessarily one best way to undertake administrative overhead calculation. What I think you just told me isn't specific necessarily to the administrative overhead calculation. You're talking about process with respect to cost sharing generally. Is that right?
I think the principles equally apply to cost sharing generally as it does to administrative overhead. So in the report, we did specifically talk about the administrative overhead. And I think that the wording there, maybe it's not as clear as it could be, but balancing the effort required to conduct. So that's conduct the whole process, which I was just speaking to. And also the likelihood of materiality of variance. So materiality of variance means, okay, if we just took a percentage and we took a simple path, are we likely to be, very far out one way or the other? The parties will come to a conclusion on that. And if it's within acceptable range, then they could, move into a different direction. So those are the things to consider, whether it's administrative overhead, which is one sub cost, or a broader cost. It's a process involved in figuring out cost sharing.
So for example, in one of Ms. Miller's response to your report, she's saying, maybe you want to use a fixed number, figure out what the administrative overhead is, and then use a fixed number so people have, if that's an issue for people in terms of certainty of cost, that might be a factor that could be a concern that's a driver in the discussion. Is that an example that works with your example, with your sort of a process approach?
If I was working with a client and they wanted a fixed rate for being one number for longer term, based on what we've done work with, some of the long-term financial planning, I don't think it meets all of the principles, because you're not actually going to be looking at any inflationary pressures or cost differences, different usage things, especially with some of the different services where it is user-based, and could have cost fluctuations. So a fixed starts to fall out of alignment with what the actual costs are and how it should be distributed and why.
So how do you address the problem then if one municipality gets into an agreement with another and it's all based on actual costs when one municipality delivers the service and controls the cost?
How do I address?
Well, I'm asking you how you reconcile that if the concern for the other municipality is what it actually costs. Can I afford it?
Right. Well, mostly in our role, we don't make decisions for the municipalities. And so it certainly facilitates the process as I've described. And then, part of that facilitation is the, working through the thought process, or sometimes we refer to it as a thought experiment. So extrapolating, if this, then what, into the logical flow. So I have been part of some discussions looking at some of the cost sharing arrangements where there's a difference between the urban and the rural. And then when we play it out saying, well, in order to take an approach where one does not want to be able to afford the other, so, it has been actually the case where it's the rural contributing to some of the urban, just by nature of where some of the service assets live. Then, it can be handled if you do not want to be a cost sharing participant. Then residents in your constituency have to bear the load individually.
The
And
user pay system. Right?
A 100% user pay system. And what I have seen, and I can't speak to whether it would be the case universally across Alberta or across Canada, that is when typically, because we're usually working with committees of council members and senior administrators, that's when council says, well, hang on, I don't want to deal with that resident blowback on if they want to use a specific service, they have to pay a whole cost. So in my experience, walking down that road actually walks back and finds a way to actually find some agreement in one of the other methods that they can do as far as funding it through existing resources or shifting into how do they accumulate the resources that need revenues to pay for the costs.
But you understand that the town is using a full cost accounting model that is based on a user pay system, right?
I understand that the town is referencing a full cost accounting method. and that they have applied that in calculating their administrative overhead. So that's what I reviewed and commented on.
Throughout your report, there are references to two phrases that occur regularly. One is "it is assumed," and the other is "it appears that." Every time that those statements are made, I take it is because you are relying on assumptions as opposed to, I think, what I was going to call an audit, but I think you actually called you had a better word, which is the accounting term for it, and I'm forgetting it.
Assurance?
Assurance, yes, it's an assurance audit, exactly. So the reason that those phrases are being deployed is to acknowledge the fact that you haven't done an assurance level review.
Correct. We reviewed the information that was given to us and want to be very clear that that's what we're reviewing. We're not providing an assurance opinion.
Right, and then specifically, if we turn to page 9, I'll use a specific example just to be illustrative of the point. And I'm picking one randomly, there's lots, so I'm just going to pick this one because it was the first one that I looked at when I looked down. So there's this particular, on the top bullet, you talk about M&P is not able to assess the town's approach against best practices with the information provided to date. And that's because you had limited information available to you. Is that right?
Correct.
Okay. And then under number 1, we see the "it is assumed that" phrase at the beginning. And you've explained that it's assumed there'll be a signed agreement outlining what costs will be allocated. I take it by signed agreement, you mean ICF agreement. Is that right?
Well, and before ICFs, that it's not it was not an invention of the provincial government to figure out how municipalities could collaborate. So cost sharing agreements pre-existed ICFs. So that's why I refer to it specifically as a signed agreement as opposed to specifically an ICF.
Right. Okay. Have you seen any of the agreements that these parties had between them before?
Not in detail. No, that wasn't in the scope of what we reviewed for this opinion.
Okay. And then in the second bullet, we see the second phrase. You say, upon reviewing the documentation provided by the town, it would appear that the current method is applied consistently. See that?
Yep.
And there again, you're saying it would appear based on what we were provided, and what we were provided was Appendix 2, correct?
Correct.
And so are you aware that Ms. Barney has given evidence that overhead accounting, the administrative overhead accounting calculations that are set out in that page 40, I think it's page 40, the page we looked at earlier with the table of numbers?
Mm-hmm.
Are you aware, sorry, my question, I just wanted to make sure you got my reference point. The page of numbers, that is the administrative overhead calculation. Are you aware that Ms. Barney testified that that is not being used right now?
I'm not aware, no.
Oh, okay. So is that what's meant when you say that the method is applied consistently?
When we take the description of the method and we look at the numbers and do a test calculation, yes, it applies that method. It's applied consistently in the evidence that we were given to review.
So within schedule, sorry, I keep calling it schedule, it's Appendix 2, on page 40, you test drove some of the calculations that are set out in those line items in that table. Is that right?
My colleague Benji, ran through the calculation test drove, your words test drove, or tested that, saying, if we take this as the calculation method, if I randomly pick out some of these things, does it appear that it shows up? So that's where we're careful to use the words, especially when it's coming from a firm like MMP and a CPA. We need to be very specific on the words that we use in a report, because it is not an assurance opinion. It is, we did this, we see this, ergo I can say that.
Right. Yeah, and I understand. I understand your clarifications there. I just wanted to make sure that I understand in this particular bullet how it's being used. So if I go back a second, and I also understood when Benji Wasser is doing those calculations based on what's in Appendix 2, you did mention before, none of the source data has been reviewed in that calculation. It's really just running the math. That's from the data that's in that table. Is that correct?
Correct. No, we did not look at any source or do any kind of audit or assurance.
Okay. So you don't know what the numbers are that are in the total capital or total operating cost columns, correct?
No, we assume that what's provided is accurate, and then therefore we can run the test that we ran.
Perfect. Okay. Follow you. Thank you. And then similarly, the same is true of page 41 of your report, which is the life cycle table. It would be the same approach, correct?
Correct.
And that's why you're also using, so if we scroll down on this page in the third bullet, you say, it is assumed that all the documents referenced exist. You have not checked if they exist.
No, we did not. But it is assumed that if you're talking about these various documents, based on our experience working with other municipalities, we have seen typically when referenced, they exist. So that's why we're making an assumption that where the documents referenced, they exist.
And similarly, the bullet underneath that, you're making an assumption that duly qualified practitioners prepared them because that's your past experience.
Correct.
And in the bullet that's at the bottom of that page there, MNP's opinion that the town has a solid program for asset management. You're basing that on having reviewed the things that are in your list of bullets, bulleted items there, and saying, because it appears these things exist, we would assume we've opined that they have a solid program for asset management. Is that right?
Correct. Yes.
I have a question about you, page 10, about your page 10 under additional observations.
Mhm.
You say there, MNP in the second bullet did not see much information on new assets. Were you provided with any information about what the town is in the evidence in this arbitration calling the municipal center? Does that ring a bell?
No, I'm not sure what your question is.
Do you know anything about the municipal center in the town of Whitecourt?
Not as it relates to this report, no.
And so when you say you did not see much information on new assets, did you see any?
Only what could have been perhaps inferred on the documents that we had, but the rest of the point there is it appears to be associated with capital placement upgrades. So facility already exists, and how are we going to manage that life cycle of what already exists?
And so if new costs were included in the administrative overhead or life cycle plan calculations, but not disclosed to you, you wouldn't know about them.
If it wasn't disclosed to me, I wouldn't know about it, correct?
Right. And if you looked at the document, it doesn't show up on its face, it wouldn't be disclosed to you, correct?
Correct.
So let's look at those documents, 40 and 41. We can first go to 41, please. If we look at the column it's very small in here. If we look at the column that's on the left that says, there's a highlighted first item that says Whitecourt Fire Hall.
Mhm.
Are all of these items, to your knowledge, just related to the fire hall?
When presented to us as the document and then following below, that would be the assumption we've made because we haven't been otherwise directed.
And were there, was this the only life cycle plan budget that you looked at?
So Roberts, I don't want to qualitatively or I'm not sure the word, say for sure yes or no, because it feels like we had a few other documents, but I would have to go back and reference what was provided and actually just confirm also with my colleague, Mr. Chalk, to make sure I was giving an accurate answer to that question.
Okay. As of right now, you personally do not know whether you looked at other items. You think you might have, but you can't say.
I can't say for certain. No, I can't.
Okay, that's good. Thanks. Okay. Ms. House, I just would like to take a few minutes. May I have Mr. Ward and I have spoken earlier before today, and I think we both are confident we will finish this morning. So I wonder if I could just have 5 minutes, please. I'm
Yes.
not in the same place as my client. I just want to give them a call.
Yes, no problem. Go ahead.
Thank you.
Thank you.
Okay, thanks for your patience.
We'll
Mr.
take
Richardson.
5 minutes. Mr. Richardson, you can. Okay, you can just go on mute, and if you need to go to the washroom, get a coffee, whatever, come back in 5 minutes, okay?
Hi, everybody. Sorry for just a moment. I had to test my microphone. It said it didn't think that it was there. Can you hear me?
Yes.
Okay, so weird. Okay, I don't have any further questions for you, Mr. Richardson. Thank you very much.
Mr. Ward, any questions in arising?
Mr. Richardson, just one question arising. Ms. Antler, could you turn to page 8 of Mr. Richardson's report? At the bottom of that page, you have 4 principles set out there related to administrative overhead. And my friend had asked you the question of whether you would agree that affordability should also be a principle. And do you recall providing evidence around the fact that affordability relates to questions or discussions between the parties about service levels? Do you recall that discussion?
Yes.
Is it your view that affordability is relevant to whether one party should pay its appropriate share of administrative overhead?
So my opinion of should they pay the share.
So, my friend had asked about what the effect of affordability is or how you deal with that, but specific to the issue of should one party pay its share of administrative overhead, is it your view that affordability is relevant to that specific question?
No, I don't think that's relevant to that specific question because we're talking about the sharing of costs. The costs have been incurred. They must be shared.
This house, that is not a proper redirect question, but I'm going to let it stand on the record. I'm just going to caution Mr. Ward. I'm going to check if there's any more questions that are not proper redirect.
That was my only question arising.
Okay. Anything further with the witness?
Mr. Richardson, could you just repeat the last part of your answer there? You said, no, it's about cost share. You were asked about, is affordability relevant to whether one party should pay its share?
So my response was if it's the costs incurred and the shares have been defined, affordability is not a factor of whether or not they should or shouldn't pay that share. Ms. House, I do have one question, if I may, maybe about a process piece. Ms. Roberts was asking if we reviewed any other documents relative to the life cycle costs. I said I couldn't recall. I'd have to look it up. During the break, I went back and looked at what else we looked at. I don't know if it's relevant. This is kind of my first time, so apologies if I'm doing things wrong. But I did see that there's other documents that were indeed reviewed.
There's no wrong in the process, Mr. Richardson. So go ahead and tell us what you reviewed.
Well, sorry, Ms. Howes, I just wonder if, I think if the documents aren't before us, can we leave it on the record that there were additional documents reviewed? We don't have access to any of those other documents. So I just have a concern about the fact I trust their life cycle documents, unless we can maybe ask Mr. Richardson that narrow question. It was my line of questioning. Can we just narrow the question a little bit?
Well, I think it's appropriate, Ms. Roberts, for you to ask follow-up questions when he's now saying, I have that information you asked me about, okay?
Yeah,
so,
I'm happy to do that.
So let's start and find out what his answer would be to you about what documents they reviewed, and then you can follow up questions.
So thank you for going back, first of all, Mr. Richardson. Secondly, I think we were specifically looking at the life cycle document. So let's turn there. It was page 41. And I think my question to you was whether you looked at any other items, life cycle. I think I specifically asked you, did you look at other life cycle plan budgets for areas other than Whitecourt Fire Hall. And
Correct.
yes, and your answer was you believed that there had been others, but you couldn't say for certain and you'd have to go back and check. And so today, if I ask you now, were there others that you looked at? The answer is yes.
Correct.
Okay. And specifically, the others that you were looking at looked like this, but were for different areas than the Whitecourt Fire Hall.
Well, I can give you the names of the documents that were included.
Well, we might get there. We might not. I just want to control the process a little bit.
Okay.
And so what I want to know is, were they documents like this one where there's a budget, essentially a 20-year or however many year life cycle plan budget?
There is budget and there is comments.
Okay. And they were on services or facilities rather other than the fire hall.
Correct.
Okay. I'm not going to, Ms. House, I'm not going to ask the witness about what specific areas. I'm satisfied knowing that there were others that they looked at, but they've chosen not to include them.
Okay, Mr. Ward, any follow-up on those questions?
No, Ms. House.
Thanks again, Mr. Richardson.
Yeah, sorry if I took up extra time unnecessarily.
Fine. Mr. Richardson, I'm just going to ask you to hold for a minute. I'm going to check my notes and see if there were any other questions I had for you. Mr. Richardson, early on, you were asked by Mr. Ward, you were looking at page 8 of your opinion on the administrative overhead. You were talking about the approach that the town used. You said you aren't saying it's not the one way or the best way. Depends on the greatest concerns that there are, and you have to balance cost and effort to verify.
Yes.
Okay, so when you start looking at the cost and effort to verify, so there I'm gathering, and please correct me if I'm wrong, that if the approach is to have this full cost accounting, very detailed, that then the cost to demonstrate that from the municipality who's providing the service and now accounting for it to the other municipality who's contributing to it increases.
Yes, by nature of additional activities, it's assumed that people and systems must power that, which is greater than simply taking one calculation, agreeing and applying.
Okay, so then would that increased cost now be something that both municipalities would bear the cost of?
I think that would be up to the municipalities to determine how that goes about.
Okay.
In a negotiation or a consideration or collaboration process, I think it would depend on who's asking for it, or are they agreeing to it? Is it a participatory approach, or is one requesting the other? And therefore the considerations of where that cost is borne is applied.
Okay. You were also asked, and I think it was about, yes, it's still on page 8. Later on, I think it was in the questions from Ms. Roberts. You were asked about the top of page 8 of your report. Now, in that first bullet, you reviewed the full cost accounting guide, and we've talked about what that was. And the second bullet down, you say the utility approach is the recommended approach. I think I picked up that you said that's simply restating what's in the guide and it's not your opinion. Did I pick that up right?
Correct.
Okay. Mr. Richardson, you talked about your experience working with municipalities around ICFs.
Yes.
And some of the principles you put in your report are principles you say come from your experience. You were asked about the principle of equitable. In your experience, how have you seen municipalities use that principle in their ICFs?
So, Ms. House, my hesitation is in our report, we stated the 4 principles and we defined them. And I'm not trying to be difficult. I just want to make sure that I'm doing a similar type of approach where we have a definition and then I can speak to it.
Mm-hmm. So I believe the word is used in the Municipal Government Act. That's why I'm asking you that. Based on your experience, what you have seen municipalities do with that.
Okay, so if we're going to relate to that, equitable and in working with the ICFs is typically looking at making sure the costs that must be shared are allocated according to, you know, a form in which it reflects the usership, if that's a word I can use. So if we, let's pick an example to be specific. So we've come across in some cases, let's pick that the urban or the town has a pool facility. And this pool facility is used by both town residents and residents from the surrounding rural areas. And in that process, it's either there are no other such facilities in any other vicinity. So all residents from the rural are considered and all residents from the town are considered. And then you saw in our report, our attempt to just lay that out on the simple approach, where they're saying, okay, if we're going to be equitable in cost sharing, or if we're talking about, depends on how you term it, but ratepayers or citizens or taxpayers, what's the number of taxpayers in municipality A, number of taxpayers in municipality B, figure out the math and proportionality, and then that's the proportionality that would be applied to the costs. So yeah, I have seen it come up as far as, you know, a term that has been identified as a principle that the parties are using in determining their ICF, but then they define it. And the definition is a little bit of what comes in there. So to answer your question, I'm providing a definition and an application in the way that I have experienced it.
Thank you. And Ms. Miller used a principle of value as well in her report. I have to get the exact word. Let me just see. Value add. And in your experience, have you seen that used by municipalities in their ICF?
No, I have not seen that principle applied to cost sharing. And the reason for that is value add. That's more a question of relevance or a citizen satisfaction. And it's kind of predetermined on the existence or the current service level of that particular service. So precedes a cost sharing conversation.
So for example, and I appreciate that Ms. Miller is listening so that she'll be able to comment on this when it comes to her time as well. We've heard evidence here focusing on the fire service that the town provides to the county, and that the town purchased a aerial ladder truck. So if you were looking at value add for a county resident, just taking your example here, would the county resident who doesn't think they ever would use the aerial truck or have them called to their property, they would say there's no value in my county paying for that kind of tax? Is that the kind of approach you're talking about here?
No, I think it's a bit more complex than that example,
Okay.
because in the case of a fire service, the fire service, in aggregate provides certain service levels, which is inclusive of response times, and mainly it's around response times would be their key metric. And in their ability to provide response times, in behind that, you rely on the expertise of the fire department and those that are in it to determine what assets and resources they need in order to deliver that service level. So what I have seen in the past is, yes, I have seen similar questions and comments come up in the past in those discussions. And the response back is, well, if we're talking about this is the total cost of the service, in order for that service to exist, experts have determined this is the resources that we need to do it. The question is, how are we going to share the cost?
As opposed to breaking it down per item or thing that's done.
Correct.
Okay.
I don't think it's impossible to break it down, but I think it really falls apart, because now you'd have to determine, is it the specific asset that creates the service level, or is it the service itself and the entirety of all assets and resources that creates the service level? I'm not qualified to answer that question. I would rely on the experts at the fire department to answer that question.
Thank you. Those are my questions. I'll ask council if there are any questions arising from my questions. Okay, so Ms. Roberts, I'll start with you.
No, nothing arising. Thanks.
No, thank you.
Nothing rising for me either, Ms. House.
Mr. Richardson, I thank you very much for spending time with us today. We appreciate it. So you're free to go at this point in time. We do welcome you to stay while Ms. Miller testifies in case there's anything that we need to ask both of you. Okay, so I think we seem to be working it well, that such that I've tried to ask my questions to you that I would have had from her report and get your view on it. But if it's possible for you to hang around, it would be great.
Would it be okay if I step away for about a half an hour to attend to something and then come back?
Yes.
Okay. And I'd also like to just apologize for my background. I was planning to be in the office, but with the instructions to work from home, I'm just moving in and I can't blur this background. So I don't know how to do that.
Blurring your background, I learned the hard way, comes with the quality of the camera that you're using. So that's the hint, okay? And we aren't concerned about people's backgrounds at this point in time, unless it's really obscene, because we're all in the same situation. So thank you very much.
Well, thank you. I'll turn my camera off and mute, and then when I come back, I'll turn the camera back on so you can see that I'm back.
Thank you very much.
Okay, thank you.
Ms. House, would you like me to go right into it, or would you like a short break?
I think we should take about 10 minutes for sure. Okay.
Sure.
But we'll come back at 5 minutes too.
Sounds good.
Thank you.
Thank you.
Ms. Roberts, whenever you're ready.
So I'd like to begin by, my process would be to introduce Ms. Miller and then seek to have her qualified. I will be asking to have her qualified as an expert in municipal government accounting.
I'll affirm her first if she has no objection. Ms. Miller, do you have any objection to being affirmed?
No, I don't.
Thank you very much. So it's Colette with one L. Miller,
Yes.
Miller.
Yes.
Sorry, I didn't realize I didn't have my camera on. You solemnly affirm that the evidence you will give in this hearing will be the truth, the whole truth, and nothing but the truth.
Yes, I do.
Thank you. Go ahead, Ms. Roberts.
Thank you. So as I was saying, I would just like to introduce the witness through her qualifications. I'll have Ms. Miller go over those. Just for the record, I will be asking at the end of that to qualify to me, Ms. Miller, as an expert in municipal government accounting. So first, I'd just like to ask, Ms. Miller has two reports, so that her CV is attached to them, but I'll use the first report if we might. And it's the last tab. Should have pulled up the page for you. Sorry, Ms. Miller. Oh, you have it there. Okay, so Ms. Miller, I might just have you go through your professional experience and related experience relevant to your testimony in this arbitration, please.
Okay, so as it says there, I'm a partner with Wild and Company Chartered Accountants. We are part of Wild Advisory Group, which is a accounting firm, law firm, and consulting practice. I've been working with municipalities for for 40 years, which is terrifying. I guess you don't need the emotional commentary to go along with my CV. But anyway, in working with municipalities, the main capacity has been with municipal audit and all things related to assurance. I've done a lot of consulting engagements over the years. I was an expert witness in an arbitration over cost sharing arrangement between municipalities over tangible capital assets, TCA, what is capital versus operating expenditure a few years back between urban and rural municipality and a cost sharing arrangement. My favorite part of municipal interaction has been instruction over the years. Our firm developed a course, Municipal Audit, and we had delivered that through the Institute of Chartered Accountants of Alberta for about 25 years, where we would annually update that. And then we ended up teaching that across Canada to municipalities and CPAs who were auditors of municipalities. I've also enjoyed many of the engagements for council orientations, some of the GFOA, the different organizations that teach accounting for municipal finance people. I've done mayor symposiums after elections, and all with the goal of helping people become better governors of public funds and stewards of the resources. I'm also, I was quite involved with GST and rolling that out to municipalities when that was first brought in. We've done lots of grant applications. I have done budget preparations. I've been involved with HR components of municipalities, hiring and firing different CEOs and finance people over the years, and spent a lot of time educating people around the components of financial statements and financial stewardship. What is net debt? What are appropriate levels of accumulated surplus, and so on. So municipal work has been a core of my professional life for many years. Any questions? I guess in addition to that, you can see like the board experience. I served 10 years with ATB Financial on the board. I'm director of the Canadian Business Growth Fund now, AVAC Limited. These are its startups. I'm the chair of CPA Canada Competency Map. We set the content of what students will be examined on in the future when they write the CFE. So it sets the education program. I've been involved with CPA Alberta Awards Committee and nomination committees. I was a governor for Athabasca University, and I'm on the Audit and Finance Committee and the Urban Wellness Village Committee for Covenant Health.
Great. Thank you. I don't have any questions about your qualifications. You're still a practicing accountant, I guess is my only question.
Yes, I am. I'm still doing audits.
Thank you. Mr. Ward may have some questions for you on your qualifications, as name is House, our arbitrator. So I will just create opportunity for that.
Thank you, Ms. Miller. Just one question. Have you done any specific work for municipalities in relation to intermunicipal collaboration framework agreements?
Not the ICF. I've done work with municipalities with cost sharing arrangements, which are the predecessor to ICF.
Okay. Okay, thank you. That's my only question, Ms. Miller, on your qualifications.
I don't have anything arising from that, Ms. House.
So, Mr. Ward, do you have any objection to qualifying this witness as an expert in municipal government accounting?
I do not, Ms. House.
Then she is so qualified.
Thank you. Okay, so if may we just identify the two reports, just the housekeeping piece, Ms. House, and then maybe mark them as exhibits so I don't forget.
Yes.
Okay, so we have in front of you there on the screen, Ms. Miller, what I believe to be your initial opinion provided in August. If we could just go to the first page there. Do you recognize that document?
Yes, I do.
Okay. And you prepared this document, correct?
Yes, I did.
And I believe this one, because we were managing with each other electronically, is not signed, but on the signature page, which I think is 6 pages in, sorry, my copy isn't numbered, Ms. House, or Ms. Antler, sorry. So you see there, you endorsed that electronically on that page, correct?
Yes, I did.
Okay, thanks. So if we can mark that as the next exhibit, I think we are at.
That'll be any objection, Mr. Ward?
No, Ms. House.
Then we're at exhibit 40.
Okay, thank you. And then Ms. Antler, if I may ask you to pull up the second report, it's got a cover page dated to September 3. If we could just then go to the second page of the document. Ms. Miller, you recognize this document?
Yes, I do.
And then if we could turn to the last written page. There we are. That's your signature there.
Yes, it is.
Thank you. Ms. House, or if Mr. Ward doesn't have any objections, may we mark that?
Again, no objections.
That'll be 41.
Thank you. Okay, now let's we'll start with your first report. Briefly, Ms. Miller, I'm just going to ask you to give us a little bit of an overview. And then I'll do the same with the second one, and then Mr. Ward can ask you any questions you may have about both reports. So starting with the August 13 report.
Yes.
And so you have essentially, if I might just ask you to go through the report by section and just give us a very brief summary from your perspective of what you're speaking about there.
Okay. Starting off, what we were engaged to do was provide an overview of the audited financial statements of Woodland County, the historic financial well-being of the county, including recent fiscal restraint measures for sustainability, the tax rate sufficiency, relative comparable, and any other financial and other matters of relevance. So that's where we began our engagement. The executive summary is the highlight where we very early on noted that Woodlands County, although having a long history of financial viability and ran into some really tough road bumps with the energy downturn, where they had significant uncollectible taxes, which was not uncommon in Alberta during this last recession in the oil and gas sector. So they began a bit of a spiral down because of that problem, and ended up triggering several fiscal metrics with Alberta Municipal Affairs. So We compared the relative financial positions of Woodlands and Whitecourt and point out repeatedly that each municipality is an autonomous entity and they have to independently determine what level of public service that they want to provide within a geographic region. And they, of course, with the ICF, the challenge is how to do that collaboratively. The combined revenue of the area, 54 million, combined like significant tangible capital assets and investment in infrastructure, 220 million, cash balances significant. So then on to the next page, the financial overview. Woodlands, as I mentioned, dealing with severe or significant financial difficulty. The three critical municipal financial indicators triggered put them into a viability screening of the county, and they had to come up with a sustainability plan, which they did approve. They've taken proactively budget measures to improve their operating results. And prior to this, 2008 to 2016, Woodlands was financially sound with annual operating surpluses and modest net debt balance. Whitecourt, on the other hand, has had very strong operating results. And even though there was an operating deficit in 2019, there is significant accumulated surplus of between 26 to 32 million net financial assets compared to a net debt. Net financial assets exceeding 20 million and cash balances have been 40 million for the last few years, compared to Woodlands, which is below 5 million now after sustainability. So the relative well-being where they are today is dramatically different, but it wasn't always like that for reasons explained. The next few pages just are the indicators. The first one, the tax collection base. So you can see that in 2020, they only collected 85% of their taxes assessed and are levied. In 2019, it was 80%, 2018, 82%. So this resulted in a lot of financial pressure for them because they didn't get the revenue that they were budgeting for because of non-payment from clients or from ratepayers, taxpayers. The other metrics, the average capital additions, they haven't been able to reinvest in capital at the rate that their assets are being amortized or depreciated. So that's another negative. And the third one, the net book value of the tangible capital assets is greater than 40% of the original cost. So they're on municipal affairs watch list and hoping to get off of that with their prudent measures. The cost sharing agreements over the past, it just seemed from the information we were provided with emails back and forth that there had been pretty good relationships between the town and the county. The directors of corporate services, both competent based on their credentials. Directors of corporate services were well qualified, it appeared, and they appeared to communicate collaboratively and try to work things out, provide good information. That may have deteriorated over time because there was several senior leadership and department manager changes, as well as political leadership. So over the 10 or 15 years, there are gaps in understanding and probably breakdowns in communication regarding these agreements. The next section, recommended principles of cost sharing revenue. Mr. Richardson had pointed out the M&P, which I will get into in the next report, but these are just some of the basic ones. Affordability, when we're talking about go forward, and he very correctly indicated that on a go forward, you may make choices not to spend on certain things if you can't afford to pay for it. That has nothing to do with what was committed to in the past and your legal obligations for what had been agreed to in the past. Value for investment. I think this is an interesting one, and I can maybe get into that in the commentary a bit, but value, I think it's very important. And when you look at metrics and so what are the outcomes? what is the value you're getting for your investment? If we shift to looking at the outcomes in the same way that municipal affairs has shifted to looking at these key performance indicators or metrics, if we look at some of the metrics that could be or probably are in place, we could very quickly begin to see if there is value, as James mentioned, the response time for fire departments, for example. So these are just some of the basic principles. And then the last section of the report is just all of the financial background to support the conclusions we reached about the relative financial positions of Woodlands County and the town of Whitecourt, and focused on some KPI comparables to make our conclusions about their relative positions. Any questions on that?
Well,
Or I guess,
Mr. Ward will have questions for you, I
yes,
suspect.
right,
but
okay.
I think that summary was clear. Thank you. And I think what we'll do is just go to your, you did attach a table, which we have in the report. If we could just go to the first tab, Ms. Antler. Just want to confirm that you compiled the data in this Excel spreadsheet from information that you obtained, and you cited a source, which I think is on the last of those pages.
Yeah,
Sorry. Yeah, from, sorry, why don't you go ahead and just let us know? It's actually on the top of the first page, sorry.
yeah, there's there's probably 10 or 12 tabs in that workbook that summarize all the data that the conclusions were based on. So that workbook was many tabs of information, financial information. The excerpts were from Alberta Municipal Affairs, public domain. And yeah, this is just one of the several financial worksheets that we provided.
Great. And then if we can go to your second report.
Okay.
And then I appreciate that you heard Mr. Richardson testify today and you've reviewed his materials, obviously. So just briefly, you have a summary page and you're welcome to go through that, but I wonder if you just might touch upon the sections of your rebuttal or your reply opinion.
Yeah, so as indicated, the first section, the life cycle plans, there were a lot of comments made in the MNP that indicated and supported improved cost sharing calculation approaches that are possible. The principles that I totally agree with the MNP principles, and then we added our own based on my experience. Life cycle plans, MNP pointed out that they've got some of the best practices. They do have really good practices with their life cycle and their capital planning. I've seen similar, very strong capital planning processes and in place in many municipalities. Because it's a requirement under the MGA to provide annual operating and capital budgets, it's very important that municipalities have strong processes in behind those budgets to support their life cycle plans, as they call it. And I think the one point I wanted to make was they referred to in the report the partner, they referred to Woodlands County as a partner. And even if it was meant to be generic as a tax accountant as well, partner is a very specified term that I wanted to be sure everybody understood. They are not a partner. Woodlands County is a very independent, autonomous municipality that is responsible for its own revenue and cost management under the MGA. So the life cycle plans, it's statement of fact, most of it. The budgets, and I mentioned this, although MNP did not respond to the financial evidence, I left some of this, I wanted this verbiage in here for the arbitrators, perhaps more robust understanding of the situation and the cost share, what some of the opportunities are for better cost sharing. And again, I really focus on outcomes based. So for example, the expert witness for, I don't even know if I'm allowed to say that, but FCSS, for example, if they really don't know how the money is being spent, many municipalities have grant policies where they will lay out, well, we'll give you $500,000, however, you have to report back to us on how that was spent. and specifically tell us how many programs you ran and how many participants you had, for example. So outcomes-based, response time, all of that. I think that's a really good approach to simplifying life. The administrative overhead, of course, I just really didn't think that the application of a 2008 guide to Alberta Environment's full cost accounting program is a relevant source to broadly apply to municipal overhead process. And I understand it's meant to be an illustration of full cost accounting and overhead, tracking. However, it doesn't carry over more broadly to all elements, because the basic philosophy of full cost accounting is trying to get at in this guide, and what I've seen in practice for utilities, water specific, that users of water systems, users of sewage systems should be paying full cost. And so you want to know what the overhead is to ensure that user pay philosophy is being used. And so it's a more narrow application, and it's not applied more broadly in the municipalities, so that I think Mr. Richardson also referred to recreation facilities, like the users may not be paying for their full amount of use. And so just, I didn't see that this was the appropriate application. And then I said, I think, and again, agreeing with MNP, that there's not necessarily one way to do this, but there are better ways to do this, I think. And again, is that an opinion? I think I can say my opinion on that. And then when we get into overhead, what I found, like even with the schedules and stuff, I use the term, baffle with BS, right? But you get so much data that it defeats the purpose of accountability, because that data that is provided isn't audited. And we talked earlier this morning about that there is no assurance engagements for that, because that becomes cost prohibitive. So there were some suggestions in my rebuttal here about how maybe if they insist on doing these complex things, how there might be a better way to provide some assurance around those at an affordable way. And I kind of stick to my guns about affordability and equitable and providing value. I think those are really good concepts for anything that we do with our personal money, and then very importantly, what stewards of public money do with public money. So I think that's it in a nutshell. And of course, I'm looking forward to questions.
Okay, thank you. Thanks, Ms. Miller. I think my screen's just cut you off, Ms. Howes. Would you like us to just give you a moment before Mr. Ward commences class?
Yeah, I'm just catching up on my notes. Thanks.
Fast talker.
Go ahead, Mr. Ward.
Thanks, Ms. House. Ms. Miller, if we start with your first report, going in order before we turn to the reply to MNP. Ms. Antler, if you can start on page 3 of the report. So on page 3, Ms. Miller, you start there talking about Woodlands' financial difficulties. Have you, in the course of preparing the report, reviewed financial indicators from 2018 and 2019 from the county that refer to recovery of some of those taxes that had been written off as uncollectible?
I just saw the motion that they have a plan for recovery. Any municipality is doing, and I did not see anything specifically with Woodlands, but every good business and every municipality would be doing everything they can to recover any uncollectible taxes. So in my experience, you will try. A lot of these energy companies that ultimately go belly up, there is nothing to collect. and you can't get water out of a stone. However, that doesn't prevent them from trying. One of the tricks with unpaid taxes, when you have tax recovery property, like real property, farmers, residents, there's very specific tax recovery processes that you follow to try to get taxes collectible. With M&E and linear unpaid taxes, you do have the right under tax recovery to try to seize assets. However, often there's no assets to seize, and but there is a requirement under the MGA that they follow those tax recovery processes.
And are you aware that they have been able to recover some of the taxes that have been previously written off as uncollectible?
No, but that would be very common and good news.
And as part of your review, Ms. Miller, have you done any analysis of new projects anticipated to proceed in the county over the next couple of years and what the financial impact of those projects would be?
No.
Okay. All right. Under the heading Whitecourt on this same page, you refer there and compare the accumulated surpluses of the two municipalities. Do you see that?
Yes.
You include numbers that refer to the town's surplus between 26 million and 32 million dollars. Have you reviewed as part of your report how much of that accumulated surplus or the cash balance is made up of committed reserves?
I do have the data, and yes, I looked at that. And committed reserves, anything internally committed, is exactly that. It's prudent budgeting. It's good to set up reserves for future plans. However, it is an internal motion that sets up reserves. It's not an external liability or requirement.
So in some cases, those committed reserves would deal with things like particularly legislative requirements, project carry forwards or specific projects, or funding that the town has otherwise committed to some certain purpose?
No reserves. If you have funding that is for a specific purpose that has been received, that would be in deferred liabilities, deferred revenue. It's a liability owing to a third party, and that's in the liability section. The surplus,
Current liability, right?
That's on the deferred.
Sorry, Ms. Miller, I interrupted. You can continue.
No, that's okay. But this is a very, very common question. What's the difference between deferred revenue, a grant that has been given or expected and has to be used for a project in the future? That is a liability on the balance sheet, which is different than a reserve. And a reserve is an internally dedicated amount of money for very specific projects or capital improvements. And it's a very prudent way of budgeting, because those reserves often tie in with your life cycle plans. How are we going to pay for this? So they'll take a portion of the accumulated surplus. Okay, we've made money over the years. How much are we going to earmark for the future? And with an exception, there is one reserve that is required under the MGA, and it's tax sale surplus reserve. And that's the only one that I'm aware of that's a legislated reserve. And that's where, maybe I'm boring you with accounting details. Do you want to know what the tax is?
That's fine, Ms. Miller. And
Okay.
I don't know if you have the numbers that you reviewed there in front of you, but if I told you that from the balance sheets, it appears 25.6 million of the town's reserves are committed in some way, does that
Right.
accord with your recollection?
Yes. And this is where a lot of discussion comes in. How much should we earmark of our reserves versus how much should we leave as accumulated surplus? School boards, I'm just using this comparison, and municipalities are one level more autonomous than school boards, for example. But everybody is worried about showing too much accumulated surplus, because then they're concerned that the provincial funding will get cut. So people are very careful, councillors and board members are very careful at earmarking and showing we're not just accumulating money for no reason. We are accumulating and saving very prudently as good stewards of public resources for future projects. So we are going to earmark. And on the flip side, what is an accumulated surplus? What is the amount that should be? And we always say, if you think of an accumulated surplus as an amount that you should have in your bank to pay your bills for at least 1 month or at least a quarter for 3 months, that would be a sufficient accumulated surplus. If accumulated surplus was related to how much cash in the bank. But having said that, reserves also should be funded, meaning you don't earmark money that you don't have. So you've got to have the reserves and you've got to have the cash in the bank because you've said, we're going to commit this money in the future and we've got the cash in the bank. So when we want to build or when we want to add on to the arena, we have the money.
So Ms. Miller, when you, maybe I should confirm something first. When you refer to the county's current financial position and their deficit or surplus, do you agree that the county's current budgeting already reflects a significant contribution to the town of Whitecourt for cost sharing?
Their current budget.
Sorry, I'm trying to object, sorry.
Oh, I'm
Okay.
sorry, Ms. Roberts.
If you want to take the witness to a document, that's fine. Otherwise, I'm not going to have her answer that question just randomly. Unless Ms. House orders that.
Well, sure. Why don't we turn, Ms. Antler, if you can pull up Ms. Bourbeau's reply statement, which is where the county first set out their financial information. So why don't we turn to page 140 of that document. And you may have to rotate that for Ms. Miller to see. Thank you. So this is an excerpt from Schedule 4, which are the county's statements for the year ended December 31, 2020.
Right.
And under expenses, there is a line that says transfers to local governments, $2,924,418. And along that same line, under the last column, there's another number for utilities and waste management, where it says 359,096. Do you see those two references?
Yes, I do.
And is it your, and sorry, Ms. Miller, perhaps in fairness, we should then turn to page 151 of this report. Just to give context, because I know it only says transfers to local government.
Right.
If you look at the notes to financial statements, the first note refers to the county's share with respect to the Waste Management Authority. The payment for the town for the year ended December 31, 2020 was $359,096.
Yes.
And then in the second 16B, it refers to the county's cost sharing payments to the town for the year ended December 31, 2020 was $2,924,418. Do you see that?
Yes, I do.
And so I take it those amounts formed part of the county's budget for their 2020 year. Is that fair?
They definitely would have been budgeting some amount. I don't know if it was the 2.9 million.
Well, do the financial statements that we see here, these numbers, do those reflect ordinarily in the financial statements the payments that were actually made by the county?
Paid or payable. Paid or payable. They're accrual basis financial statements. So if in this situation, 2.9 is owed to the county, to the town by the county, they may not have paid their full amount. There may be an amount outstanding. So accrual-based financial statements prepared by the county would include the entire commitment. Some of it may have been paid and some of it may still be outstanding.
And is the purpose of setting that number then, the number they use in terms of their estimate, does that form part of what they then requisition when they set the tax rate by including those numbers in their budget?
We're talking about two different things here, though. You're referring to the actual financial statements.
Yes.
So if you could flip to maybe about of the financial statements, I'm kind of mixed up here about what page it might be, but I'd like to see the revenue or statement of operations. If you have that handy, it would be about, let's shoot for page 130, see where we're at. Okay, so if we just flip, let's flip a few pages past the balance sheet. Is this okay that I'm doing this, Sharon? Keep going, keep going. Financial, one more, flip. Okay, stop. So on this page, we've got the budget numbers, and maybe on that other page you were referring to, I didn't see the budget specifically. It's not broken down by department on segmented information, but here under administration, you see the budget 8.28. Okay, compared to 8.32 actual. So what you were just showing me, what you took me to was the 2.9 actual paid or payable cost share. What is included in the 8.2 for the cost share? I don't know how much it is, but good budgeting would expect that you would be close unless there were some drastic changes. So it's a reasonable assumption that it would be in the ballpark included in that 8.284. But what you've shown me, there isn't any data to support that number for sure. I can't say with certainty. But to conclude, whatever is in this budget, yes, that's how they come up with how much revenue you need. What are we going to spend? How are we going to raise revenue? So that would then feed into how much taxes they're going to collect. They would do an assessment of how many grants they're eligible for. And at the top of that page, all the other revenue that's coming into them.
So at a very basic level, Ms. Miller, whatever the cost sharing contribution ends up being in terms of the ICF, that's not a complete net additional cost versus what we're seeing in their budget, because there is already some number budgeted for by the county when we assess their current financial position.
Yes. That I'm presuming that they would be doing things correctly, and that would be the right way to do it, that the cost share amount would be included in those budget numbers.
Thank you. And Ms. Miller, when you looked at the financial difficulties, is it your understanding generally that the county's revenue peaked in 2015 and then declined after that time?
Well, revenue, let me just pull that up. Revenue peaked. Okay, let me just see here. So back in 2008, 16 million. I'm looking at something you can't see, but 2012 was 19 million. Revenue 2015 was almost 23. 2018 was 22, 23. So revenue has been like this, and they've budgeted for a slight drop now, probably because of the taxation stresses. So they peaked at 23 million. So it wasn't that revenue dropped, it's that their expenses went up. Where the unpaid taxes show up is in an expense. So their net surplus took a drop in 2016. So just to be very clear, the difference between revenue, total revenue kept going up, expenses went way up, and that resulted in a net bottom line drop off in 2016, 2017, 18. So again, this is probably more accounting that you want to hear than you want to hear, but just to be clear, revenue was still projected and reported as high, but unpaid taxes are an expense. So the expenses went up, the revenue didn't go down.
Right. So when you talk about expenses, you're counting unpaid taxes as one of those significant expenses.
when they write them off. Allowance for doubtful accounts, AFDA, when they have a tax write-off, then those expenses showed up. Yes.
Is it also the case, separate from uncollectible taxes, that the county's assessment dropped during that time?
Their assessment may have dropped. Just let me have a peek here, because that will show up in your net municipal property tax. So, you know what? I have schedules on tax revenue, because tax revenue itself is complex, right? Because your assessment base may be going up or down, and then you may compensate by increasing or decreasing your mill rates for a changing assessment. And then you add on top of all of the external requisitions that are required. There's many different moving pieces when we talk about taxes.
Right.
And
So when you say that, just to be clear, Ms. Miller, oftentimes you're budgeting to receive a certain amount. So if you know that your assessment is decreasing, you adjust the mill rate. Otherwise, what you effectively are doing is giving a tax break where the assessment value has decreased. Is that what you mean?
Yeah. So Mr. Ward, to your point, the assessment in 2018 was 2.4. Is that billion or trillion?
I'm sure Ms. Roberts wishes it was trillion, but
yeah, it's 2.4 billion. 2019 is 2.361. 2020 was 19.5. 2021, the assessment is 2.18. So high, drop.
right.
Yes. Yeah. 4 years of decreasing assessment. So aligned with that, there is a compensating increase in the mill rates. So the mill rates, and I'll just use the linear one, because again, there's 7 different components to mill rates, but 10.1, 10.37, 11.17, 12.18. Okay, so as the assessment dropped, to my earlier point, they had to increase mill rates. And
so Ms. Miller, just before you move from that point, you've talked about the change post 2018, but where the revenue starts to drop in 2015, if you're looking at the county's mill rates at that time, would you agree from 2015 to 2016, there was actually no change to the mill rate?
that's right. Yeah. 2015, because nobody expected this downturn, right? A little bit, people got flat-footed.
Okay,
So
but
yes,
then
2.1.
From 2016 to 2017, there's a very small change from 9.7749 to 9.8726.
Yes.
Is that correct?
Yeah, that's right. That's right.
Okay.
Yeah, right on.
And I think your report shows that conversely, the town has increased its revenue from property taxes between 2014 and 2020.
Increased its property tax revenue. Okay, probably, yes, that makes sense to me.
Okay. When you were looking at the county's mill rates, are you aware that the county has an assessment class known as residential improved land?
Yes, I saw that.
And did you note that that assessment class had a 0 tax rate from at least 2007 until it was changed in 2017?
No, I didn't. But honestly, I think I was focused on the last few years where the crisis happened rather than who knows what they were doing 13 or 14 years ago. So no, I didn't notice that.
Okay, but even up until 2017, did you notice that it remained a 0 mill rate?
What I have open right now, let's see, 1.50. Yes, but and honestly, I didn't know what that residential improvement rate was for, right? And because with municipalities, what does it really mean? Like they have a requirement to tax, and farmers, again, not knowing farm residential, you get a pretty good break on the farm for your residents. And so it could have to do with the complexities of rural and farm home exemptions, but I'm just speculating. I don't know.
Okay, fair enough. You didn't ask as to what that class applies to or how it's used by the county?
No. I made my own presumption, which again, we know that's always dangerous, but I didn't dig into it further.
All right. If we turn back to your report, let's go to page 6. So under the principles, you've talked about a user pay philosophy. And Ms. Miller, do you know of any municipal arena or pool in Alberta that's funded solely through user fees?
No, but we're talking about municipal affairs that's encouraging all Alberta municipalities to adopt a user pay philosophy for utilities. I have never seen it with recreation. It would be, recreation is always viewed as not the loss leader, but it's the attraction to a community that's required, that brings up business, that brings up the assessment base, the tax revenue, because if you've got good recreation, you've got all the collateral upside in a community. So I have not seen user pay philosophy purely with rec service.
All right. Let's turn to your rebuttal report, if you can, Ms. Adler. And Ms. Miller, while she's pulling that up, just to conclude the last point, would you agree when you're setting user fees for something like a recreation facility that it's important to consider not simply the cost of the service, but also things like ability of users to pay or the cost of comparable facilities in coming up with those user fees?
There's many factors that are considered. I think one of the focuses that we'll get into with this rebuttal is the overhead. How everybody runs their business is different. I'm sure your law practice is different than Sharon's law practice, for example, and what space you rent and how you choose to staff it. So with recreation, the way the services are delivered and the amount of overhead that is taken on is an important thing to consider, and we'll get into that. Looking at full cost, I think maybe I've lost my train of thought here, but because I like to babble too much, but this inconsistency of user pay that's brought up with the overhead, it can't be carried out through everything. So all the factors that are considered, what is reasonable? Are people able to pay? Are there perks for town employees that get free passes to their recreation sites? All these things are taken into consideration in setting rates. Okay, we've decided that all municipal employees get a free family pass to all our rec facilities. All of those considerations would be looked at by all parties in trying to come up with reasonable rates. FCSS, and FCSS does provide some of those services to lower income families, for example, or programming perhaps, and schools are often subsidized. You have to put your hand up and stop me.
No, that's okay, Ms. Miller. I don't want to interrupt. So we'll get to that specifically maybe in this report, and I can ask you about those things. So if you turn to the second page, first you deal with the issues of life cycle plans and talk about the use of reserves to fund future services. And I think you've indicated that reserves may be one option, but obviously municipalities could also choose to fund capital expenditures as they arise over time. And that would also be an option that is open to a municipality. Is that right?
That is right. It's not the safest approach. A lot of municipalities, I think, again, caught flat-footed with the reduction in provincial grants or federal grants, right? Because with MSI funding, a lot of municipalities would plan the road program based on rural road grant, for example. And then when all of those things got reconfigured and they realized they're not going to get as much money from the provincial government or the gas tax from the federal government, whatever the program is, then they had to be a little more diligent about reserves and future planning. But there are still grants. And so what comes in a year is you can, I guess, call that funding from operations in the current year. And a common area for that is water, like water, landfill replacements, sewage treatment plants. Those are big projects that get funded through several different sources that are planned for out of capital operating grants.
And so I guess the concern then with funding it without reserves or without planning is it would result in significant fluctuations in the payments that are made by the municipality in years where there's a significant capital expenditure.
Yeah, you get into affordability because we can see how municipalities don't have a lot of tools in their toolbox to raise extra revenue. So if you know you have this much tax revenue coming in, and now you want to do something major with capital, what services are you going to cut? Because it's not like you're building up huge amounts. If you are building up surpluses, then you're going to be diligently putting them into reserves or earmarking the money.
All right, let's turn to the next page 3. And if you scroll down to part C where you talk about administrative overhead. So I think, Ms. Miller, you've expressed your concern that the use of that particular program, your concern is that it's not used consistently because the program deals with full cost recovery through user fees, and that's not the way that the town is applying that full cost accounting program. Is that fair?
That's one element to it. The other elements is that guide isn't meant for application in this purpose. But if you want to get into the theoretical discussion of what is full cost accounting, there might be some better sources. But I guess the guide is useful in that it illustrates what is meant by full cost accounting from an educational point of view. But it's just, I didn't think it was that relevant to be using that, but maybe it was just to help them figure it out.
Right. And so is it your understanding that the town's use of it was really for the purpose of illustrating full cost accounting as opposed to actually applying the specific program the way that it's set out there?
That could have been their intention. I won't speculate because I mean, I am speculating. I don't know, but I'm speculating that maybe they thought, okay, this will work. And then you look at the detail and then you realize that didn't work. Still.
And so if we step back generally then, let me ask you, Ms. Miller, do you agree that there are certain overhead costs that are not otherwise directly captured in cost sharing for things like human resources support, IT support, insurance costs, that those administrative cost items are not always directly captured in the fees associated with the service?
There may be some that aren't, and I saw in the calculations specific things that were backed out. But if you step back one further step and you go back to the beginning of two autonomous municipalities running their businesses in two different ways, why is there all this focus on overhead in the first place? Because then you get into all this hair splitting about, oh, we meant to include this, but we didn't include that. And it turns it into this accounting exercise without any appropriate measurement of outcome. Everybody's wasting all their time on anal accounting steps instead of what are we trying to accomplish? And that is providing great rec services, providing great fire response, providing FCS programming that helps disadvantaged children, whatever.
Well,
So-
and would you agree, Ms. Miller, that part of what's required to deliver recreation or fire FCS services are some necessary administrative work, including human resources management of the employees in those areas, IT services that allow those programs to be run, insurance costs relating to the facilities or the operations, that those are things that are necessary for the delivery of those services?
Yes.
And I think your concern in part is about the administrative burden associated with calculating those. And I think you've noted that sometimes those costs are instead dealt with as a fixed percentage of the cost of delivering the service. Is that right?
I didn't say that last part, but I have a concern about the administrative burden, but I also have a concern that all this information is provided, but none of it is tied back to the audited financial statements. So there is no assurance over any of it. And the third concern goes back to running your business. So if the town decides that they need administrative overhead of 4 people to run their fire department, and the county decides, well, we could do that with only 2 people, like all of a sudden you've introduced a layer of detail and the lack of autonomy in those decisions that is irreconcilable.
Well, you've talked a bit in your report about alternative ways of looking at this. And maybe I put your words in your mouth in terms of the fixed percentage of costs. What are the other models that you've seen used to deal with administrative costs associated with the delivery of services?
Sometimes there is no administrative. It's not specifically highlighted as administrative overhead. So when you look at the town pays the county $40,000 for the airport, you can back it up and say, well, some of this is for administration and some of it is this or that, but it's a flat rate. I've seen municipalities that pay, $200,000 for victim services. Clearly, there's administration to victim services. However, they just say we're comfortable paying $200,000, and they don't go down into the administrative component of the cost share. So it's backed out a level so that the admin overhead is assumed. To your earlier point, it's required, but it's not separately tracked. And then if you take this higher level approach, then the accountability comes in the outcomes. How many people access victim services? Those kinds of things.
So those are situations where the parties have been able to agree on a lump sum or an amount that compensates for the direct service and also the administrative costs. And in those circumstances, it's easier for the parties to just agree on an all-inclusive sum that would capture those things.
Right. And, if you look at the history of the cost share, if you look back, if the county has always been paying about 2 million, 2.5 million, whatever, and it's for police, fire, FCSS, recreation, I think that they could come up with these lump sums very easily that, hey, we're going to pay. And that's how I've seen in other municipalities, we're okay with paying 1.3 million for rec a year, but don't, just maybe at the end of the year, tell us how many minor hockey games did the junior team play? How many people use the swimming pool? Like, look at the outcomes of what we spent. Who's enjoying it? Because what's never measured, and then like I mentioned earlier, the collateral win when you have a rec department. If you get into this, well, the county participants for this and the town participants for that. Again, nobody wins because they're not looking at the full cost or the full benefit of, yeah, well, when they were here, the county people in the town, they spent how much on groceries, on the restaurants, supplies. You can, like, as an accountant, I see how people go down these rabbit holes because we all love to just dig into the numbers and come up with the perfect solution. But I find that the deeper people go into coming up with the perfect solution, they have lost sight of the forest for the trees. That was more than you asked for.
No, that's fine. Ms. House, we're at noon, I appreciate, but I think I may be close to finish. Can I also just have 5 minutes before we conclude?
Yes, we'll take a 5-minute break.
Thank you. Thank you, Ms. Miller. I don't have any further questions.
Are you tired of me talking about accounting?
Well, you're not off the hook from Ms. House yet.
Can't hear
That's
you.
what you were asking.
Any follow-up?
Oh, I do not.
Okay. I have a few questions to better understand the report, Ms. Miller, or the reports. First question, I guess, is that I think because of the timing, you were engaged for an opinions for the arbitration, not for the negotiations between the parties. Am I wrong in that?
That is correct.
Okay. So just so I have the context, okay. In terms of the financial overview information that you provide, is that going to the factor that you talk about in terms of affordability?
Yes. Because, you know, there's a few metrics there that we've compared on the tab that's KPI comparables. These are some of the key ones, but we've already talked about cash in the bank. You know, Woodlands has a relatively low cash balance. Woodlands is in a net financial debt position rather than having net financial assets. On its own, net debt may not be a bad thing, but without getting into the whole conversation about what does net debt mean, in this situation, it ties in with the municipal financial indicator that they may not be replacing their capital assets as quickly as they are depreciating. And then the big one is their accumulated surplus net of TCA is relatively low. And to Mr. Ward's comments or questions about reserves, it does impair their ability they don't have the funds available to earmark for future capital projects to the extent they did prior to the recession. And the indicators are all good for the town of Whitecourt. They're strong.
So in terms of your experience with cost sharing, how does that come into cost sharing?
Well, there has to be, I think James had earlier talked about the discussion about what services can we provide? What do we want to provide? So that is fundamental. If it's more important to provide recreation rather than having an airport, for example, all of those high-level decisions have to start with the respective municipalities. What do they think are important? And then when you have such a long history of cost sharing to the extent that they have been contributing, that would indicate to me that there is a certain level of service required and has been affordable. So then, you know, we dabbled on this a bit too, the two sides of the accounting equation. What are the costs? What services and costs are you going to incur? And then how are you going to pay for that? So you always have the ability to cut costs and you have some wiggle room with increasing revenue, AKA the mill rate. Or searching for some municipalities are great at finding other sources of income, like grants that they didn't know about, or different projects that generate more income, or increasing user fees.
So in terms of two municipalities, and you talk about each municipality being autonomous, independent, making their own decisions. So the municipality that's having the financial difficulty has to decide what services it wants and at what levels.
Yes.
But that I'm picking up from your second answer based on the history that may be difficult for them because now there's a history of providing certain services at a certain level that the residents now expect.
Agree.
Okay,
So, and to, I guess, round it off, their financial difficulty is related to the same period of time that many businesses in Alberta had financial difficulty or went bankrupt. So this too will pass, In the meantime, when you have the respect of the other, like town of Whitecourt, when there is this major financial impact of unpaid taxes, and whether you collect more later or not, but that affects everybody. And town of Whitecourt probably was affected very dramatically by the downturn in the economy, by not having their hotels filled and restaurants busy. So, they are autonomous, but I think having good conversations at that level, like we are, by virtue of living in this geography, we're in it together and we need to solve it together. Instead of he said, she said, me, you, we're all going to win if we do this right.
So then when you talk about you can increase revenue, particularly on the tax side, that's dependent, that can only be done by the municipality that's experiencing the financial difficulties. They control their own taxes.
Each municipality controls their own taxes. Town of Whitecourt could raise their taxes. They could say, we're not getting as much cost share as we want. We need to raise our taxes. Woodlands County could say, we want to keep paying the cost share. We're going to raise our taxes to some extent. But then I really think this word that keeps coming up is affordability. Like you look at rural municipalities and the level of service, we're farmers. So I know on the farm, we don't get water, sewer, all of those basic services everybody gets in town. Our municipal taxes reflect that. They're lower than somebody living in town that's getting garbage collection and everything else. So you look at affordability of your ratepayers, I think all of those things are taken into account. And probably Whitecourt did the same thing. Like, man, our businesses are going through a tough time. Do we really want to increase taxes?
But the only group that could decide to increase taxes is that municipality.
Yes,
they can't
that's
impose
right.
it on the other.
No.
So for example, like one municipality who doesn't want to pay as much into the cost share anymore may say, we're not going to pay any more into the cost share, but you can make it up by raising your own taxes.
Right, that's right. And your statement is correct. Each municipality has control over their own taxes, except there are external requisitions like seniors housing. It used to be hospitals, but there's a few, an ASFF, Alberta School Foundation Fund. Those are imposed amounts of taxes that must be collected. But one municipality, other than those very specific examples, cannot impose an increase on another.
Right. And then in terms of cutting costs, there's always in these arrangements one municipality who is responsible for providing the service and another municipality that contributes to the cost. So when you talk about that arrangement, cutting costs then has to be a decision by the municipality providing the service.
Yes, however, the municipality that is making the cost share contribution can cut its costs, other costs. So let's say they said it's really important for us to fund recreation. We're going to cut our roadside mowing and our road grading program by 400,000 this year. We're cutting our re-graveling program. They have discretion over other elements of their own operations that they could cut if they prioritize the cost share and the importance of contributing to the town.
Okay, so let me just make sure that I understand that. If we're talking about a town and a county, and the town provides the service, the town could say, we can cut our costs as a part of this negotiation you're talking about in this, we'll find a common way.
Yes.
They could say, well, we'll cut our costs for the next 2 years so that your cost share contribution can come down. On the other hand, the municipality, the county who's contributing may say, well, it's important that we make sure our people still get the same recreation or fire or whatever it is service we're talking about. And so we're going to cut other services to our residents, and we're prepared to explain that to them so that we can still provide them this service through the cost share.
That's perfect. Yes.
Okay.
And I think they have done that in their sustainability plan. They have looked at how can they save costs more generally.
But one municipality, whatever their approach, can't impose it on the other.
No,
Not even through a cost share agreement.
unless it's a previously contracted amount. But go forward, no, they have to agree.
On your first report, unfortunately, there isn't page numbers on it, but 1, 2, 3, 4, where it says cost and revenue sharing agreements, that page?
Yes.
I think it's another page yet.
Yeah, one more.
That one, yeah. 1, 2, 3. In the third bullet, you talked about this a little bit in your summary. You talked about gaps in understanding. Turnover in the finance team, as well as senior leadership and department managers, there may be gaps in understanding communication. What information did you have about turnover? Like, where's the turnover?
So this came up in some of my questions to the team, but there were emails between Judy and Sue. And I found out that she was the previous finance director of corporate services or finance person prior to Alicia Bourbeau. And Gordon had only been in his role, I'm trying to remember, was it 2 or 3 years? So, and then there was also one of the expert witnesses, the FCSS director, talked about she didn't know what happened back then. And this would be, there's nothing maleficent about it. This is just normal life, and people move and change careers or jobs. And so there is this gap sometimes in knowing the whole history of why something was done the way it was. Yeah, and I think I had just mentioned, like, those emails between Sue and Judy were good. They seem to be really trying hard to, one would ask for information and the other one, okay, they kind of got it between each other. And, but that's very superficial. That's just based on the information in Judy's report, Judy Barney's report.
Okay. So the people who enter into these cost and revenue sharing agreements are the counselors though, right?
Yes, they are the ones that would have to, often management or administration will lead and they will have recommendations. Then it's councils that would approve. And that's where you get into the politics of a situation versus the core accounting or business conclusions or recommendations that the management or leadership team may make. So I think it would be a collaborative activity where the senior leadership team, getting input from all the directors, comes up with a recommendation and some suggestions, and then that is discussed collaboratively with their councils. And then, they had that joint liaison committee for capital, representatives from both sides. In the end, I believe it's the council that has to sign the ICF, but I am not 100% positive on that.
As an auditor of municipal accounting practices, does the council have to be aware of, understand, and accept the financial situation?
Absolutely. They are ultimately responsible, and we report to council. We don't report to management as auditors.
So from that, would I take that the people who should understand the agreements that the municipalities have entered into are the councillors?
Yes, they need to understand it. And that needs to be based on all the good information that is provided through the life cycle plans, through the capital budget, through the operating budget, and then regular reporting back to those councils to make sure that budget variances are explained. Council is responsible under the MGA for the public stewardship, for the stewardship of public money and resources. They have to sign and approve the audited financial statements. And they have to approve the budgets.
So I guess then I'm not quite sure I understand why you talk about, in terms of your observations on the historic arrangements and agreements, why you talk about changes in the management team having any impact on it.
Because everything that the management team does, all of the foundational pieces of the accounting and reporting is done by the management team. So they're the ones responsible for putting together all of the data that is to inform council. In Judy Barney's report, and I didn't see it in Peter Smeal's report, and I didn't, like from a council perspective, there is always turnover of council, of the elected officials, now every 4 years. So there is a presumed changing of the guard to some extent every 4 years. The senior leadership team is the core. And it's very important for them to have the processes in place when one person leaves, that the next person, the successor, can transition that knowledge and continue to communicate the core financial premises and processes to the council that may not always be there.
Okay. In terms of your last bullet in that section, you talk about the impact of time on any ICF or cost sharing agreement, and that municipal priorities may change over time.
Yes.
Do you advocate for a particular term for an ICF?
You know, I would think that a 3-year minimum, maybe a 5-year with chances of renewal and opening it up at least every 5 years. That's what I would advocate for. Some things didn't even exist before, you know, like has the municipality thought about charging stations for electric vehicles? Has the municipality looked at solar options for their rec centers, the rec facilities? So we don't even know what's coming down the road. So I think with our with the way the pace of change today, I would advocate for shorter, but the flip side of that, the balance is that capital especially requires more long-term planning. And so maybe 5 years would be a reasonable amount. With you know, and I think James had mentioned earlier about inflation, and you can work in some of those factors, you know, COLA increases for salaries if that's part of the cost anyway. And I think these agreements should also recognize the impact of extraordinary events. You know, you look at Slave Lake Fire, Fort McMurray fires, flooding in Mackenzie County, you know, flooding in Calgary and High River. All of those things came with such huge financial burden that wasn't completely funded from disaster recovery. So what happens if you have an oil and gas downturn, an extended recession, and that has an impact in your whole community? Then what? How do both sides take that into account in understanding and compassion, really?
Okay. Going on to your next part where you talk about the principles, you talk about accountability and documentation. What's the cost of that approach that you talk about?
So the cost of, you mean in the first, that first bullet about audited segmented information by department. If you start with, so we've looked at the financial statements, and that the first one, I think Mr. Ward had pulled up segmented information. And so what would the additional cost be if they started with those numbers and used that as, here's our department cost for fire. Let's back out the things that we're not paying for. Let's do a reconciliation. And that would be the time. It would be administration time, finance person time. Doing that instead of what they're doing, there might be time savings. The finance people may have 101 reasons why it's too high of a level. But again, if it's me at council, I'd be saying, what is the high level thing we're trying to accomplish? I don't care about the insurance premium for fire department right now. I want to know the big picture, the same way as they treated the airport. We want to just know, here's the 40,000. So I don't think there's an extra cost. It's a different way of doing it. And I'm not advocating for an additional assurance engagement. I think James had mentioned that. I mean, you could do attestation of specific financial information, but if there isn't a basic element of trust, you're kind of dead before you're out of the gate.
And if it's the council that is looking for the detail as opposed to the big picture?
You got a big problem. That is very classic council, where you'll have, you'll present financial statements, millions of dollars spent on road projects, and an unpaid holdback of $1.2 million that wasn't booked. And somebody will ask the question, well, how much, why did they spend that $200 to Joe's restaurant for that FCSS meeting? But, so this is part of the education. You as council, you are responsible for this very big picture. And if you don't have the processes and the people in place that give you the assurance that you're getting the story you need to make, good decisions, you've got some education ahead of you, right? So this, with audit, there's materiality, and I know James had referred to materiality earlier, and that's a very defined term under audit. It's a margin of error that's allowed in financial statements. But I think it's just the finance officer and the CAO constantly educating council about the very serious requirement to manage public money and to provide services, but at a big picture.
So having that approach by one municipality and trying to impose it on the other as part of the accountability could be a difficulty.
Yes, because a lot of municipalities can't manage it themselves. And that's where, some of these courses, local government, or for newly elected officials, a lot of those, what are your roles and responsibilities? Those are really important. And there's a lot of good elected officials there that get it. But there's some that are just, again, maybe I shouldn't say this, but the big fish in the little pond syndrome, where they're out to make sure that Pete, the grader man, is grading my road the right way. And that kind of counselor, it's an election. You have no control over that, but they're missing the boat. When you get that kind of micromanagement.
So a couple of bullets down, you talk about value for investment, or you just state it. Can you tell me what you mean by that?
I think that goes back to some of my early comments about policies around grants and the outcomes and the KPIs or the metrics. And I liked James's example, or your example, of the response time, versus the ladder truck, right? So that discussion kind of highlights that. But are you getting value? And so the value, it shows up. But if you focused on value, like if you said, historically, we've contributed 100,000 to FCSS programs. At the end of the year, instead of getting all the numbers detail, if you got a one-page report saying we ran 5 Head Start classes, we did summer fun, we've done adult literacy, and we've done cooking for parents, that would be value. And that shift in what am I paying for? In healthcare, we're full of metrics, right? How many inpatient visits, how many emerge visits, length of stay, how many deaths, blah, blah, blah. And yet what we really need to focus on is how much health is there? Did people get better on their own? Did the PCN provide good diabetes care? So it's all about value, and public money in municipalities should be tied to what are the outcomes.
Okay, and services required versus services desired.
Yes.
That's the choice of the two municipalities.
Yes.
And driven by the residents?
Yes, I think any good elected official listens to, their ratepayers, their stakeholders, and you know, the nice to have versus the need to not to have, like I think it was brought up about the Miller Center, like a theater in your community. Well, that would be fantastic to have. I chaired a committee for a theater in Vegreville. Well, it costs too much money and you can't make it go without a large corporate donor. So, you know, everything is trade-off. You can't not plow the bus route in a county, but you may be able to shut the hours of operation that the, you know, canyon is open, or Hard Luck Canyon facilities, the season, for example.
You talk about reciprocity and equity.
Yeah, I was
What
referring.
what did you examine there in terms of how you came up to that comment about the inequities?
Well, the $40,000 for the airport is a lump sum that doesn't seem to consider all of the additional benefits that an airport may bring to a community. And it isn't full cost accounting. It's not factoring in the overhead compared to the cost share contributions that factor in all the overhead. So it just seems like two different ways of cost sharing between them. And there's probably good reason why it arose that way, but that seems inequitable to me. If you think that this is a good system, why wouldn't you use it both ways?
So there you're talking about historically what they had in place.
Yes, yes.
And from that, am I taking that you would advocate for the same approach on both sides?
Yes, yes. What's good for the goose?
And when you talk about reciprocity in terms of value of county rec facilities versus town rec facilities, what factors into that?
So the campgrounds, and I can't remember the names of all the facilities that Woodlands had. You know, if they want to know how many town people are using the Woodlands facilities versus how many county people are using the town facilities, again, anybody could get the data, but is it going to solve the bigger problem? I don't think so. So I think that there should be an acknowledgement that, you know, again, it goes both ways, that a lot of people from town love to go out to the county and use those campgrounds and rec facilities the same way as the county people using the arena or the swimming pool. And so again, like that Hard Luck Canyon, I think was a $10,000 lump sum amount, but there's no, in the information I reviewed, there was no data about the town people using that versus the county people using the town stuff.
So is that about, sorry, Mr. Ward, go ahead.
Sorry, Ms. Howes, I don't mean to interrupt. Mr. Richardson had told me earlier he was available until 12:30. He may be able to extend that. I'm not sure if you thought you may have questions for him, in which case I'll see if he can make arrangements to stay, or if you thought that you didn't need him to. I just wanted to flag that so we didn't lose him before he left, before we address that.
I thank you for that. Mr. Richardson, I think I'm not going to have any questions for you. So thank you very much.
Thank you, Ms. Howes. Sorry for that.
Well, thank you. I'll just ask this one question, then we'll talk about lunch or what we're going to do. In terms of what you were just saying, Ms. Miller, is that really focusing on acknowledgement? And is part of value set by how the recognition is given?
I was relating it to the value, like, is there user fees, or is there funding that goes from the town to the county for the use of those campgrounds? Has that been considered? The same way that they're having discussions about the county using town facilities. So it was, I mean, there is the acknowledgement component, but this was meant to come back to the money.
So in order to talk about reciprocity, you'd have to have the value of everything and put it in a bucket, or else you would have to try and identify what services or facilities are comparable and then do the reciprocity between those.
Yeah. You know, in an agreement, I could see the discussion going like, well, for rec facilities, you know, this is what we were thinking is reasonable. We acknowledge that our people use this, and this from Woodlands, you know, the community rec facilities. So let's carve it off instead of at 1.5 million, let's carve it off at 1.3 million. That oversimplifies it perhaps, but I like backing out of it and looking at it from you know, a higher perspective than into, you know, this community rec facility, this campground, we spent this much on a person for cleaning. Like, it's never ending if you do that.
So I'm hoping that we're not in a negotiation here. I'm going to have to make a decision. So I'm hoping that both council listen to your approach, because they're the ones that have to tell me what the reciprocity value is then.
Mm-hmm. Mm-hmm.
Right.
Yeah. And I don't have anything to do with the council. Like, my engagement is very narrow here.
Yeah. Okay. Then I'm just flipping to your second report. You made a comment on the, I guess, first page of your second report about partnership or partners. For you, that has a specific term as an audit. That means it has a specific definition.
Yes.
But I think I understand, as the parties have used it, that it doesn't either mean a legal partnership or something formal under an auditor position. They're referring to their relationship with each other.
Yeah, but even that's a slippery slope, because partner, it's not an audit term, it's a business term. So when you think of two autonomous municipalities, generic term partner, to me, it is a bit of a slippery slope, because it's a legal term. And I don't want any confusion that the town is responsible for its own life cycle. Woodlands is responsible for its own life cycle. And then together they're going to come up with their ICF. But in no way are they like my business partner. If you have business partners, like, we're making decisions for the greater group. I have the power, you have the power, you know, it's different. So I personally, maybe because I'm a partner in an accounting firm here, I'm very cautious with the use of that word.
So when you look at ICFs and cost sharing agreements. It's more like buying a service.
I guess in its simplest form, but there's way more to it, you know, because it is buying a service. Is that as good as it gets? Maybe. Because I feel like I want it to be more, that you want to make the community, the geographic area better for everybody. So, but I guess that's underlying it. If you said, I know that by buying the service, we'll all be better. So maybe that's a good summary of it. But there's so many more elements to it. Huh.
On the next page, under you have concerns about the overhead process. You were asked a number of questions about this. I thought I heard you say something about the general content of the guide, that it does provide the basic principles of full cost accounting.
It's illustrative.
Okay.
Or educational.
Have you, in your experience, seen any municipalities that are doing outside of utilities 100% user pay principles?
With land development, I guess, would be one area, you know, subdivision development, full cost would be used there. I'm just going through the list.
So that's an example where the developer who wants to now develop a certain piece of land is going to pay the full cost of infrastructure and everything to do it. That's the kind of thing you're referencing.
Yes, and also if the town develops a subdivision, because some municipalities develop their own, the lots are sold to potential future residents at full cost.
Right, okay. But between municipalities, have you seen it where they have a service that is being used between municipalities and it's 100% user pay?
Between municipalities, 100% user.
So for example, recreation, fire services, FCSS.
No,
library.
no, I have not seen that. It's usually, you know, a little bit of estimation and lump sums that have been negotiated, and both sides are either equally angry or equally happy, which is a sign of a good agreement.
Okay, thanks. And on that page as well, where you talk about user pay, that's page 3 of your report at the top. Where you start, this then enabled system users to get, you were following through on the OH process in the next page.
Oh yeah.
I think the next page, Ms. Antler. There, okay.
At the top there.
Yeah. So out of this, is your message that whatever approach you're going to use should be used all the way through? So you shouldn't have a lump sum here and a user pay there and a whatever. It should be a common approach because that's part of the simplicity of it.
Yes. Or they implied that they're using one way of doing it, but it seemed inconsistent. But I agree. If you can be consistent, and the simpler the better. That seems efficient.
Thank you very much. You've helped me understand your report a lot better. Okay. Any
you.
questions arising? I guess I'll go to Mr. Ward first and then Ms. Roberts.
No, Ms. House, nothing arising from me. Thank you.
Ms. Roberts?
Sorry, are you waiting on me?
Yes.
I said no.
Oh, I'm sorry.
I don't think anybody heard me unless
No.
maybe Mr. Ward did. I was like suddenly realizing I'm like, you're all looking at me. Sorry. I'm like,
Ms. Miller, I want to thank you very much for your time and your information you've shared with us. We appreciate it and you're free to go.
Thank you very much.
thanks everybody.
Been interesting.
Ms. House, do you want to speak to council briefly?
Yes, following up on our discussion process from last week, so that would be appreciated. So other than that, are we now at the end of the witness segment of the hearing?
We are, yes.
Okay. So our next day back here will be I think it's the 27th, remind me, that's right?
That's right, yeah.
At 9 o'clock, okay. All right, so Ms. Antler, if you can put two counsel and myself in a room and